rapt attention, made copious notes, and traveled all the way to Omaha more than once to just be in the same room as the great man. Today, we mark the end of an era. The Oracle of Omaha, Warren Buffett, has officially hung up his boots.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
Welcome, you're watching NDTV Profit. I'm Mahima Vachajani and with me is Puneet Jhaveri, and this is the afternoon edition of Ask Profit, a show that gets all your stock related queries answered. For viewers who are tuning in, you can either call us or WhatsApp us on the numbers that will be flashing on your screen up there. But before we move on to your queries, a quick look as to how the markets are doing. The Nifty 50 trading below the 26,100 levels now, down 0.6 odd % at almost at its day's low point. It's been a range bound trade, but also a very topsy-turvy trade is what we've seen. The Bank Nifty also in the red, down by about 0.3 odd %. With regards to where the contribution to the Nifty 50 is concerned, let's try to pull up that and see as to what are the counters that are actually contributing well to the Nifty. Of ICICI Bank, Titan, TCS, HCL Tech, on the green side. And on the flip side, you have counters like HDFC Bank, which continues to weigh down on the Nifty. Maruti, Bharti Airtel and SBI are some other names with regards to where the contribution is concerned. But let's try to pull up the sectoral heat map to see as to how sectors are faring in trade right now. You have counters like the Nifty IT, which is doing fairly well after seeing a lot of pressure in the past couple of days, up 1.7%. Nifty Pharma also in the green, up 0.5%. But on the flip side, Nifty Auto facing pressure, seeing profit booking down 1.3%. Nifty Realty, Nifty Oil and Gas, Nifty PSU Bank, all of these counters continue to be under pressure. So that's with regards to where the sectoral heat map is concerned. But quickly, the advance decline ratio, because that at the start of the day today was almost even Stevens, but right now you're seeing declines more than advances, and that chart has flipped. More towards the bearish side is what we're seeing on the broader end of spectrum, and that's reflected in the mid cap 150 and the small cap 250 as well.
Well, most certainly, and what a zigzag kind of a day we in the broader markets, and all the outperformers of the last 2 days are under pressure. So Maruti Suzuki hit a high a couple of days ago, down today almost 4%, and it's almost puzzling as to why that could be. But the BSE 500, before we start the show and take all your stock related queries for the afternoon edition of Ask Profit, Tata Elxsi is one of the biggest gainers. So is KPIT Tech, and it's back on it's on the back of a note from JP Morgan, and we'll discuss that with our experts as well. While on the losing side, Maruti, as I mentioned, M&M Finance and CSB Bank are on the back of the quarterly updates a couple of days ago are down. But let me welcome in Mr. G. Chokalingam, the founder and MD of Economics Research on the fundamentals, while Aditya Agarwala will help us on the technicals, the head of research and investment at Invest for EDU. Gentlemen, thanks so much for joining in for Ask Profit, the afternoon edition. Let me start off with the first query, and it's on Rainbow Children Medicare. This query is coming in from Sriram Raghuram, who's from Chennai, and he's bought it at 535. So he's certainly done well for himself on this particular trade. Gains of almost 15,000 rupees as we speak. He's asking that, a long-term view on the stock. So let me go to Mr. Chokalingam for this. Good afternoon, Mr. Chokalingam. Your view on Rainbow Children Medicare, he's almost in gains of almost 100%. Should he continue to hold?
This healthcare industry, particularly hospital segment, has got a lot of long-term good prospects. More than 50% of the FDI within healthcare has been directed towards hospital sector. So the industry has got a good tailwind. And as far as the company is concerned, Yes, it has done quite very well in the last 2-3 years. Valuation is slightly stretched at a P of around 50 on a trailing basis. So I would give a long-term hold call. With the investment horizon of minimum 1 year, one can hold for another 1 to 2 years.
All right, so that's with regards to where Rainbow Children Hospital and of course the entire space is concerned. The next question that we have is from Nagesh, who's writing us from Bengaluru. He's holding 372 IEX shares, as buying price is 244. Wants to know if he can hold or exit at the current levels. Aditya, very good afternoon to you. I'll come to you on this one. What are the charts indicating for IEX?
Afternoon, Mahima. Thanks for having the show. It's more of an up move that we're witnessing for the past two trading sessions on the back of good volumes. So my sense is there is some more upside in the stock for sure. Might not go to his buying levels, but at least can come to levels of 170 to about 185. That is the gap area for the stock. And I would recommend continue to hold at least till that area of 175, 185 and revisit the stock around those areas and see how the chart structure is placed around those areas. And then maybe you can take a call of whether to exit at a minor loss or continue to hold. But at current levels, I would recommend you can hold with the stop loss at 140 on the downside and look for a target of 175, 185 on the upside.
All right, okay, so that's with regards to where IEX stands. Next question that we have is is from Mohit, who's writing us from Kerala, asking about Federal Bank. He wants to buy Federal Bank for the next 1 year. Wants to know if this is the right price or should he wait to reach the 250 levels or even below that. Aditya, what would your recommendation be?
Can wait it out. In fact, Mahima, I would recommend buying in a staggered manner because he's looking at a 1 year time horizon or more. Can buy some at current levels and on declines to levels of 240, 245. Can add on to the further positions and then hold on to it for at least a year and look for a target of 300 on the upside. On the downside, can place a stop loss below 220. So try and buy it out all the way down till 240 in a staggered manner. Look for a target of 300 on the upside. Place a stop loss just below 220.
Got the view, Aditya, but let's go across to our first caller for today. It's coming in from Bengaluru. Karthik has a stock query for us. Karthik, very good afternoon. Welcome to Ask Profit. What's your query?
Hi, good afternoon. I have a query on Anantraj. So I have around 40 shares plotting at the price of 581. And I'm looking for a long-term view. And is it a good time to add more or can I just hold on to what I'm having?
Got it, Karthik. And did you buy it from a longer-term perspective when you bought into this counter, or was it a short-term trade?
See, when I bought it, it was for a short-term trade. But now I want to look for a long-term, maybe 1.5 years to 2 years.
Got it. Yeah. Fair, Karthik. Mr. Chokalingam, on Anantraj, the stock's been in a sideways momentum for some months now, post 2024 and the correction that happened. Should Karthik continue to hold on to Anantraj? He's bought her at 587.
I would give a research recommendation of hold only for medium to long term. Stock has already corrected a lot. Of course, even after severe correction, it is still trading at a slightly stretched valuation. But then last 2-3 year performance has been good and there has been a lot of expansion initiatives and data center segment would definitely help the company in the medium to long term. So therefore, I would give a hold recommendation.
Okay, all right. So that's with regards to where Anantraj is concerned. The next question that we have is from Kunal, who's writing us from Chennai. And he's asking for an advice for the best bet that he can make in the IT space right now from a short-term perspective. Are there any of these IT counters that you're liking on the charts today, the top sectoral gainer for the day?
Quite a bit of them, Mahima. In fact, the first one on my radar is Persistent Systems continues to make high-rise high lows. As we speak, I guess stock is making is at day highs. So I would suggest can take an exposure in Persistent Systems from a medium to short-term time horizon. Look at a target of 6,700 on the upside. That's an immediate short-term target. Longer-term target can be 6,800 on the upside. So 6,700, 6,800 on the upside. Plus at 6350 on the downside. From the large cap space, can look at an HCL Technology. That is also something which is looking quite interesting to me. On the upside, can test levels of 1850 with a support on the downside at 1550. So HCL Technologies and Persistent Systems, these are the top two bets in the IT space. And I would suggest buying stocks from the IT space and continue to hold at least for a year or so. You will see decent gains here.
And probably the first day where we've seen such a strong move on them. Probably on the back of a note, but still, yet again, the positive move on IT is definitely a key one. because the momentum was largely lost in the first few days of the year, but definitely one to keep on your radar. The next query is coming from Sudhakar from Bengaluru. It's a very interesting one. He's bought into Ather Energy, the EV scooter maker, at 321, which is largely very close to the IPO price. He's sitting on a profits of almost 100% on this bet. He has 30 shares, asking if it's a good time to hold or sell this counter. Mr. Chokalingam, your view on the EV scooter space, because there's clearly preference for Ather over Ola Electric. Should Sudhakar book some profits or continue to hold for the medium term on Ather Energy?
I would give a sell call. Definitely, Ather has done far better than Ola. But however, the stock has rallied a lot. And two, ultimately, I believe that it is going to be very difficult to compete with traditional players like TVS, Bajaj, Hero, Asia, because these four top traditional players, they are making thousands of crores of profit from their traditional business. So they are in a better position to infuse more money and compete effectively. So therefore, considering also the rally in the price, I would give a sell call on Ather Energy.
Chokalingam, just one follow-up, because a lot of analysts, a lot of investors in PMSs also are taking a big bet on Ather. So and largely that's on the margin play, because right now they are in EBITDA losses, and effectively in the next 3 years is the expectation that it will be much in at least low single digits. Do you not think that as a play over the next couple of years, until it reaches that stage, it could be a bet, or your traditional preference continues to be TVS, Bajaj, Hero, largely on the back of the cash levels and the margins that they currently do from the ICE business?
It is absolutely possible that I may be wrong. I admit that. But coming from economics perspective, which has helped me to sustain in this field for 3 decades, that tells me that, it is going to be very tough to compete with, some of these traditional players are making even 10,000 crore of profit. So we already seen certain businesses, how, the dominant players have built the new businesses by making profit in the existing traditional businesses. So therefore, it is fairly possible that I may be absolutely wrong. I admit that. But I have a strong view that it is going to be a tough journey for next 2-3 years. Yes, short term, it may do well, but long term, I have this view.
Okay, all right. So that's with regards to where Ather Energy stands. We've got our next caller. Mohan is calling us from Bengaluru. Mohan, hi, a very good morning. Good afternoon to you. How can we help you today?
Very good afternoon. I've got Mostic Technologies, 50 shares at the rate of 267. I just want to know about the company in a long-term perspective.
Okay. Mohan, just want to understand as to what was the thinking behind buying Mostic?
This is a semiconductor company. They are doing a lot of chips and things. So in view of that, I thought long-term view would be good. So it's a small cap company. So I just have invested on.
Okay. Mr. Chokalingam, I'll come to you directly for this one. Any view on Mostic?
It's highly stretched, but one can hold it. One can give a chance for another 1 or 2 quarters to see whether they are able to make any success in Mostic, because on an annual basis, last 3-4 years, they have grown quite impressively. So I would give a hold for the short to medium term. Then after a couple of quarters, I would review the call.
And, it's we're still getting used to the afternoon edition of Ask Profit, of course. So that's definitely one.
That's where the good morning comes in.
That's where the good morning comes in. But largely on, in terms of the amount of queries that we've gotten on a lot of these stocks like Moschip, on Cupid over the last few days has been quite stark and quite important as well from retail investor standpoint, that you take our experts' advice on these stocks. So do continue sending them and give us a call also if you want to speak directly to us. Next one's on Bajaj Hindustan Sugar. Now, our viewer, NKS from Mumbai, he's also a regular viewer, so thanks so much for that, NKS. He's bought it at 45 rupees per share, stock's trading at 18. So he's sitting at a massive loss of 13,000 rupees, holding 500 shares. Asking a quick view, Aditya, your view on Bajaj Hindustan, is it possible that NKS can recover and come back to his buying price on this one?
Doesn't look like immediately, honestly, because stock has been constantly making lower lows, lower highs. Immediate support on the downside is somewhere around 16.5 bucks. Might consolidate around these zones, but coming back to his buying price is something which is I'm a little skeptical whether it will come anytime soon. Instead, I would suggest if you're getting an opportunity to exit, book losses here, and maybe put that money in some other sector which is right now looking attractive. can recover his losses as well, because here most likely the money will get stuck for a prolonged period of time.
Okay. The next question that we have is from Satyan, and Mr. Oklingam, this is directed towards you. He wants to ask this question to you. He wants a view on Sterling Tools. He's already sitting on a loss of 20% is what he's saying on this particular counter. It's a very small company, 967 crore in terms of market cap, basically into manufacturing of fasteners and MCUs. Do you have a view on this one?
Yeah, in fact, we used to cover it and we closed it, the day the company announced, quarterly results wherein the EV component business took a big beating. So that time we closed it. Of course, the stock also corrected from 2-year high of over 700 rupees to current level. I would give a whole recommendation now because the company again got tie up with a few foreign technology providers and getting into more new products in the EV space. And existing business also reasonably doing well, standalone business. So therefore, I would give a whole recommendation on the stock.
अगला सवाल जो है वो तेलंगाना से आ रहा है। नागेश जी हमारे साथ जुड़े एक सवाल के लिए। नागेश, वेरी गुड आफ्टरनून, आपका क्या है सवाल?
ये सर IOCL का अभी कम में है सर, अभी नया लेने वाले को अभी लेने का ले सकता है।
अच्छा ठीक है नागेश, और ये आप थोड़ी टाइम के लिए होल्ड कर सकते हैं नागेश, या ये शॉर्ट टर्म बेट है?
लॉन्ग टर्म के लिए सर।
लॉन्ग टर्म के लिए। मिस्टर चोकालिंगम, IOCL पे आपका क्या व्यू रहेगा इन टर्म्स ऑफ स्टॉक पिक, एंड रिक्वेस्ट यू टू गिव द आंसर इन हिंदी सो दैट नागेश कैन आल्सो गेट थ्रू योर व्यू ऑन IOCL।
होल्ड कर सकते हैं, सिंगल डिजिट पी में ट्रेड हो रहा है अभी।
नहीं, ही इज आस्किंग मिस्टर चोकालिंगम अगर वो इस भाव पे घुस सकते हैं बाय करने के लिए।
बाई करने के लिए इंतजार कर सकते हैं। रीजन इज ऑयल प्राइस बहुत नीचे आ गया, नियरली 25% नीचे आ गया 52 वीक हाई से। सो बाइंग का दिसंबर क्वार्टरली रिजल्ट तक वेट कर सकते हैं, इंतजार कर सकते हैं, बट अदरवाइज मीडियम टू लॉन्ग टर्म होल्ड कर सकते हैं IOC।
Okay, so that's with regards to where IOC stands. The next question that we have is from Prasad, who's writing us from Hyderabad. Vari Energies is the counter, and he's holding 291 shares, priced at 2894, and he's sitting on a loss of over 79,000 rupees. Wants to know whether he can hold or average at this point of time. In fact, we did have a conversation with the management as well today. You'll be able to catch that conversation on our YouTube channels, but recently, one of the subsidiaries have finished the fundraise of around 1,000 crores. But Aditya, I'll come to you on this one, because considering he's already sitting on a lot of loss, do you think it makes sense for him to continue to hold from a slightly long-term perspective?
Can continue to hold, I would suggest, but keep a tight stop loss close to about 25.50 on the downside, because we've seen this space getting a lot crowded, and stocks usually are not performing to its potential. The kind of euphoria that we'd seen in this entire space once is now getting beaten down. So maybe can continue to hold, do not average, continue to hold closer to about 25.50 should be your stop loss. If that is breached on the downside, maybe you can review the stock once again, and if required, exit and shift to some other sector. That would be a better suggestion.
Got the view, Aditya. We have our next query coming in from Sampath, and he's asking if it's a good time to buy into Kaynes Technology. It's another stock that we've had on a radar over the last few weeks. Mr. Chokalingam, your view on Kaynes Technologies, as well as I'm sure we've spoken to you about the EMS space, but is it something that you would recommend based on the cash flow concerns that have happened over the last few years and are now getting highlighted a lot as well? What would you recommend?
More than those highlights, my worry comes from a different perspective. Of course, after the fall also, it is trading at, P of over 60 times on trailing basis. But apart from this, the major worry comes from the fact that yesterday we all have seen in media, the government has cleared 46 new proposals in ECMS space, electronic component manufacturing space, and through PLI scheme. And the PLI outlay is estimated to be more than 45,000 crore. I think this is a massive structural change in the ECM industry, and which means the competition is going to be extremely high, intense. And let us not forget the fact that even L&T has proposed to get into this. So therefore, at best, I would give a hold recommendation. I would not, venture to give a buy recommendation at this juncture.
Okay. All right. So that's with regards to where Kane's Tech stands. We've got our next caller. Vinod is calling us from Maharashtra. Vinod, hi. A very good afternoon to you. How can we help you today?
Hi. Good afternoon. Over last 2 years, I have accumulated 70 shares of Titan at an average cost of 3,400.
Okay.
And based on its value growth, today I see substantial rise.
Right.
Though the volume growth is muted. So is it good time to book profit, though I can hold for a longer period if we expect a good return?
Right. Vinod, I got your question and your point is valid and you've done your research well, I must say that. Mr. Tokalingam, what he's saying is not wrong, right? A lot of these jewelry companies are seeing growth on the back of value growth that is coming in from the gold rally that we've seen, but volume growth is still a question mark. Do you think that considering today's rally for Titan, it makes sense for him to book partial profits or should he continue to hold?
I agree with you. Apart from volume, the value growth has helped. And already there are reports of fall in the demand for jewelry in this country because of very high prices for gold-based jewelries. And I would give a sell call. I would look for opportunities from, totally new kind of stock in Nifty like Apollo Hospital. So I believe that stock has got a promising, consistent, steady growth than for the next 1 to 3 years.
Got your view, Mr. Chokalingam, but we have our next query and it's again on retail favorite stock, Vodafone Idea. Continues to have so many queries here from us, and this is from Sridhar from Karimnagar asking a view. Aditya, I'm pretty sure you lost count of the number of times we've asked you on Vodafone Idea, but your view on the counter yet again today.
It's a very tricky one to answer, honestly, because stock hasn't been doing much for itself. There are occasional pops here and there, can test levels of 16.5, 18 on the upside. But again, it's a long shot. You don't really know when it's going to come there. If he can continue to hold, maybe he can do so with a stop loss at 10 rupees on the downside and look for a target of 16 to 18. That is where he can look to exit. The fact that some things are positive for the stock right now can see a pop at least till 15 to about 16 odd levels.
Okay. All right. So that's the technical view with regards to where Vodafone Idea stands. But Aditya and Mr. Tokalingam, it's time for our rapid fire segment. What we try to do is we'll try to throw as many questions as possible. Try to keep your answers as short as possible to buy, sell and hold. The first question that we have is from Teja, who wants to know for ITC Hotels if he can hold this counter for the next 5 years in his portfolio. Mr. Chokalingam, I know you like Taj GVK, but ITC Hotels, what's the view like?
Yeah, stock also corrected a lot, so one can hold for a very long term.
Bank of Maharashtra, IDFC First or South India Bank? Mr. Chokalingam, your pick for the next 5 years.
Obviously, Bank of Maharashtra, the fundamental speaks for itself compared to other two stocks.
Okay, BPCL is the next one. Neha from Bengaluru is holding 140 shares at an average price of 302. From a 2 months perspective, should she continue to hold? Aditya, your view?
Continue to hold, look for a target of 400 on the upside.
Godavari Power and Ispat, Aditya, if you're tracking this counter, our viewer Raj has bought it at 199. Your view?
Can continue to hold, maybe look for a target of 290 on the upside.
Okay, United Breweries on the charts. How is it faring? Aditya, your view?
Quick one on United Breweries doesn't look all that great to me. If you're looking for a fresh entry, avoid if you already have the stock. Place a stop loss somewhere around 1480 on the downside.
Aavas Finance bought at 1860. Aditya, should he continue to hold? He's been holding for the last 18 months.
Not really. Stock has just been into a narrow consolidation phase. I would recommend exit from the stock and look at other financial NBFCs which are doing better.
Okay, and MDC is the next one. Prabha wants to know if she can continue to hold. She's bought 930 shares. Mr. Tokalingam, your view?
I would give sell call on this stock now.
Hind Copper bought at 407 by Mayank. Should he hold or sell, Mr. Chokalingam?
Around 575, it's a sell call.
Okay, LIC Housing Finance already sitting on profits of 34%. Venkat wants to know if he can shift to HDFC Bank from a long-term perspective. Is that the right thing to do, Mr. Tokalingam?
I don't think so. One can better bank on banks like Bank of India rather than LIC Housing.
Hindustan Foods, Mr. Chokalingam, and do you cover the stock? Kumar's, it has 40% of his holding in this one share.
Yeah, I am a little concerned about the valuation of Hindustan Food.
Maruti, Apollo Hospitals, between the two, Aditya, where are the charts looking more attractive?
At this point of time, Apollo Hospital is slightly better as compared to risk to reward favorable. Can test levels of 8,000 on the upside, support on the downside 73.50.
Nalco, Aditya bought at 317 by a month. Should he sell out or hold?
Can book partial profits, sitting slightly at overbought levels. Not a bad idea to book out profits after such a big rally.
Okay, Vamsi has bought Swiggy at the levels of 380 for the next 3 months. Can she continue to hold? Aditya, your view on the chart?
Can continue to hold, though there is no immediate upside in the stock. The moment comes to 400 odd levels, look to exit.
Alright, so that brings us to the end of this rapid fire round of Fast Profit. Mr. Chokalingam and Aditya, thank you so much for answering those queries for us. But with that, as I said, we are completely out of time on this edition of Fast Profit. Do stay tuned. India Market Close on the other side.
New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
the latest trends. It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on
Good afternoon and thanks so much for joining in. You're watching NDTV Profit and this is India Market Close. My name is Alex Matthew and you'll soon see them, my co-anchors. I've got Sharad Dubey as well as Hiral Daria with me and we'll take you through the last hour of trade. And it's looking quite interesting because it's more or less what we saw in trade yesterday and a couple of the same culprits are at play today as well. 0.33% for the benchmark Nifty 50 lower. But today you have the Nifty Bank that's trading in the red, down about 0.4%. But you have the Nifty IT that's bucking the trend and it's up in the green. Let's showcase that if we can and talk about the Nifty IT. It's up 1.7%. A few of the stocks we're going to be focusing on. We're going to actually take that magnifying glass and look at it very closely for you. But let's take the Nifty heat map up for you, and there are more losers than gainers on the screen, and there you go, a lot of losers on the screen. Titan is the stock of the day, at least from the large cap space, up about 4% or thereabouts, and you see a number of those IT companies up and about in that top line. Techem, Wipro, Infi, HCL Tech, a number of them doing particularly well. You also have on the bottom of the screen Cipla. And this is another major talking point, 4.3%. This is on account of a partner that they have that has had a few negative observations, and that's having a bearing on their stock price and on sentiment right now. Maruti Suzuki down in the dumps, down about 3% or thereabouts. Tata Motors PV also reacting a little bit negatively for a second day in a row. Remember, it was Jaguar Land Rover first, and then it was a standalone business next. But really, it is a repeat of what you saw yesterday. HDFC Bank proving to be a laggard and contributing quite a bit on the downside. The question is, does that picture hold in the broader markets, and what are the stocks that you should watch out for? Hiral, what are you picking up?
Thanks, Alex, for that. A very similar picture to yesterday, as you're saying, in terms of the benchmarks. If you see the mid-cap 150, 0.3% higher is where that index is trading at. And if you pull up the small cap 250 as well, you'll see the kind of returns that are coming in, because a lot of individual stocks that are actually buzzing in trade. The small cap actually from the day's lowest levels has seen a good recovery, pretty much on the borderline right now. Apart from that, if you see...
All right. Yes, we are seeing that in the mid-cap indices. Hiral was just mentioning the Nifty Small Cap 250 index, and interestingly, we'll see that there is a strong case point happening. There's a value buying happening, and the advanced decline ratio, that is also improving. But let's give you the entire factors to watch, which are very much important today in the day's trade. As a trader, as a positional trader, what are the important levels to watch out for? And interestingly, let's pull out the Nifty index and let's see the key numbers. That has fallen below the 10-day EMA mark. 20-day EMA levels is something which is the next level, which will be important for Nifty. If you could just show that important level, and that it is 26,080. Now that from that level onwards, if it bounces back up, that means we can see a decent short covering in the closing session. Also, apart from this, moving on, the other key sectors to watch out for would definitely be Nifty Bank. That has the falling has intensified. The support is at 10-day EMA levels. That's at 59,700. Sectoral buying coming in both pharma and the jewelry pack, but largely the stocks moves are happening. But remember, the global risk on sentiment is still remaining there. It's just a small pause but the setup is really strong. Q3 updates and operational updates, that is where the entire movement is happening, especially from brokerages. But the options data, I checked just now, it's a very narrow range movement happening. VIX has again gone down below the 10 after the 2 sessions. So of course, it's not a great day for the option players, and even the European markets have opened on a mixed note as well. So a very narrow range of activities expected, but the magic is in the small cap index. Why? Because right now we saw a recovery happening, and every time in the closing session the strength is coming in the small cap indices, and January 2nd and January 5th we saw a strong up move coming in. So we might be seeing much more value buying in the small cap indices as well. Over to you, Alex.
Right. Thank you so much, Sharad, for that. In fact, interesting moves. We have Mr. G. Chokalingam, founder and MD at Economics Research, also joining in. Mr. Chokalingam, an interesting day of trade with the kind of moves that are coming in terms of today's session. A day which is very similar to yesterday, where the pressure, if you go to see, has continued when you talk about an HDFC Bank. Third consecutive sessions of decline that have come in. Let's see what that counter is doing right now as well, if any recovery on that front. But apart from that, you have names like Cipla, Maruti, Max Health that have been trading under pressure. How are you looking at HDFC Bank versus if you have to compare this to an ICICI Bank as well?
Yeah. So ICICI Bank also, the credit growth is not, extraordinary if you see in the recent quarters. HDFC Bank, yes, there is a concern that since CD ratio is very high, there may be a conscious decision to slow down the credit growth. That is why the stock is under pressure. But I believe that ultimately in 1 or 2 quarters, HDFC Bank should be able to resolve this issue and come back to the strong growth mode. So I would consider this correction as an opportunity for medium to long-term investors.
Would you purchase, Mr. Chokalingam, and good afternoon to you, Alex here. Would you purchase in a staggered manner, or would you utilize this? Is this a very attractive? Is this a table-thumping buy for you at this moment?
Yeah, there are 3 points I want to make. In the last 35 years, I never invested in the large cap. So personally, I buy only small caps. Of course, I recommend large cap for clients. I would recommend at this price to clients with a conservative approach. Definitely, I believe in 1 or 2 years it can play out.
Okay, so let me very quickly ask you then, if you were to, at this moment, it's an open-ended question, relatively speaking, Mr. Chokalingam, from the broader markets, give me 2 or 3 stocks that you are absolutely convinced are going to be in a fundamental upcycle, but the valuations still haven't caught up.
Yeah. So obviously in the short term, it is going to be only Sensex and Nifty where you can have a tremendous confidence. So, but then you added a rider valuation comfort. So that is an issue. So if you still, ask me in the large cap, I would go with Apollo Hospital, which is in the Nifty. And if you ask me in the small and mid cap space, I would recommend something like Bayer Crop, which is beaten down in relative valuation term compared to its own P in the past. I believe it is very, very attractive. And then OFSS, Oracle Financial Services Software, that also corrected nearly 35-40% from a 2-year high. A lot of cash, a lot of dividend, and it's a product company, not a service company. And it depends on US also only up to the extent of 1/4 of the total revenue. So these are the 2 MNC stocks I am highly comfortable on the basis of the valuation.
Joining us, Nilesh Jain, Head and AVPF, Technical and Derivatives at Equity Research at Centrum Broking. Good afternoon to you, Nilesh. Interestingly, Nifty has broken its 10-day EMA also. Kind of a very small intraday basis. There is a bearish sentiment coming up, and each day there is a very large company pulling down Nifty. But Nifty Bank technical setup still remains better. What's your view on both of them?
Very good afternoon to you. Absolutely. So you rightly pointed out. So every day we are witnessing some of the other large caps are pulling the index down, specifically the Nifty index. Today as well, we have seen a kind of a short-term breakdown below 26,100. Now it appears like Nifty is heading towards 26,000 mark, and that seems to be likely to be tested going forward. Overall, Bank Nifty is still better place, although the close below 60,000 is not looking that great. But comparatively, I believe that we may see some bit of a rebound from here in the Bank Nifty specifically, which is likely to lead the pullback from here. As far as Nifty is concerned, 26,000 to 26,200, that's the immediate 200-point trading range. For the Bank Nifty, 59,600 to 60,200, that's the range for the Bank Nifty as well. Given the kind of a setup on India Weeks where we have seen further decline today, I believe going forward, there has to be some bit of a pullback in both Nifty and Bank Nifty.
Okay. All right, Nilesh, what are your technical picks?
Right, so I have a couple of recommendations. First of all, stocks that is looking promising is Solar Industries, where we have seen a fresh breakout coming in this counter. After multiple lower top and lower top formation, it has negated the bearish setup. Looks like it is heading towards 14,000 levels on the upside. So Solar Industries looks strong for a pullback move to continue on the upside towards 14,000. 13,200 should be the stop loss. Other stock that's looking positive is NMDC. So continuation of high top and high bottom formation in NMDC. Good price and volume breakout today. So we can expect a follow-up move on the upside to continue towards 90 levels. Stop loss should be placed at 82.5.
All right. There are a few stocks that are reacting quite sharply to your quarterly updates. And I won't go towards Titan because we're going to actually delve a little deeper into Titan. I want to talk about Senco Gold because this is a stock that is doing particularly well. To a certain extent, it's also because of the kind of gulf that is there between the valuations of Senco Gold compared with some of the other jewelry companies. But the question that I want to ask is, Mr. Chokalingam, 50+% increase in revenue in the quarter gone by is what they've reported in that quarterly update. But they've also talked about the fact that gold prices are up 65%. I mean, that's for everybody to see. So therefore, the volumes have actually degrown. Would you still be supportive of something like a Senco Gold, or would you give it an avoid at this point?
Yeah, very tough question. You are absolutely right. The rise in the jewelry price is going to pull down the demand. But to some extent, to be fair, the stock price already reflects the correction from 52-week high. So therefore, I would give a hold, and also considering the fact that the P ratio is very reasonable, around 23 as compared to exorbitant valuation multiples for many other jewelry companies. So I would give hold. In case the stock continues to correct, then one can buy also.
Move today, 12.5%. Is nothing to sneeze at. We spoke with the management, Suvankar Sen, who is the Managing Director and Chief Executive Officer of Senco Gold and Diamonds, and they said that they're planning to expand the lab-grown diamond segment as the big players in the industry are entering it as well, and it's starting to get more organized. Listen in.
Our studded ratio currently is at about 12.5%. Over the coming 3-4 years, we want to take our stud ratio from 12.5% to 15%. That is something that we need to keep in mind, whether it be natural diamonds, lab-grown diamonds, gemstones, all kinds of products. So this is one thing. And with the gold prices going up, it is very important that we keep on focusing on this segment because consumers will go for design, will go for utility at a lower caratage. Second is lab-grown diamond. We have seen that, the big players are also getting into it. And that means that this market is going to evolve and it'll get more organized. We had, thought of the similar decision 1 year ago. And what we are seeing is that consumers are actually gradually, the awareness levels are going up, the curiosity, the demand. People are saying that, if I have to fulfill certain desires, lab-grown diamond will able to fulfill those desires in terms of size of diamond or in terms of the design and the look that they want to get. So over a period of time, I'm quite confident. We have got 8 stores. Every year, we'll want to open about 5-6 more stores of lab-grown diamonds. But the natural diamonds, the gold, those will also continue to remain. Overall, the industry will become highly diversified.
That's the word coming in from the management of Senco Gold. In fact, we have the general insurance data that has come in as well. You have ICICI Lombard General Insurance, which has seen a growth of around 16%. New India Assurance, around 17% is the kind of uptick that they've seen in the month of December. Private sector general insurers, overall, the growth is around 15%. In fact, New India is seeing a spike as we speak right now at the day's highest levels with gains of 0.9%. You're talking about a 16 to 17% growth. Go digit again from the unlisted space, strong numbers coming in there. ICICI Lombard, 16% growth, but if you see in terms of where ICICI Lombard goes, no major reaction on that counter. It's mainly New India Assurance, which is actually reacting to these kind of numbers overall as we speak. Very quickly, Mr. Chokalingam, any view when it comes to the general insurance space on the back of the data that has come in? Overall, you're talking about somewhere in that range of 16 to 18%.
Yeah, ICICI Lombard looks good. Last 3 years, consistently it has grown its operating profit. So it proven to be a strong growth stock. So I prefer ICICI Lombard.
Okay. All right. It's that time of the show, and this is non-negotiable for us most of the time. Actually, it's nearly 2:45, and it's time for Heard on the Street. This is where Soumit Sarkar brings you all of the chatter from the dealing rooms. Soumit, good afternoon to you. A few of the stocks that you spoke about yesterday were absolutely buzzing. What do you have on your list today?
Well, a lot of stocks that have been buzzing on street today as well. Firstly, it's Sun Pharma. That's what is there on the dealers' radar, and dealers are indicating that there's a buzz of a potential acquisition that is in works when it comes to Sun Pharma. So keep an eye out for that counter. For Glenmark Pharma, multiple dealing rooms have recommended buy calls to their clients based on technical charts. So keep an eye out for that as well. For Sathvik Green, there are buy flows on the large HNI desk. Some positive news flow is expected, is what dealers have indicated. For Hitachi Energy, that counter has been under pressure for the last 1 month, but right now what dealers are indicating is that the selling pressure is largely over and the stock could bounce from the current level some more. When it comes to PNB Housing, the stock was down in trade today, and this was largely because there was a buzz that the earnings could be on the weaker side. But what dealers have indicated is that despite this buzz, there are still buy flows that are coming in for PNB Housing Finance at lower levels. So keep an eye out for PNB Housing as well. For Bajaj Holding and Bajaj Finance, dealers have indicated a paired trade. They're expecting Bajaj Holding to outperform Bajaj Finance going forward, at least for the near term. And lastly, when it comes to Delivery and AB Capital, there are buy flows on FI desk on both the counters. Delivery volumes also could be on the higher side, is what the dealers have indicated for Delivery and for AB Capital.
It's a lot, Soumit, for that. A whole lot of stocks we'll be tracking. But before that, I'd like to get in Puneet. Tata Tech, Tata Elxsi and KPIT Tech are in focus as the tech sector is buzzing in trade on back of broking upgrades as well. What's your total view coming in the IT space, Puneet? Broking upgrades and the entire sector short covering also in certain counters.
Well, most certainly, and this could be the first upgrade on the ER&D space, which is very centric to auto. And both Tata stocks, Elxsi as well as Technologies, is doing well in trade. Both have gotten upgraded today by JP Morgan. Target price increased now to 710 for Tata Tech and 4,800 for Tata Elxsi, while they've maintained an overweight rating on KPIT Tech. Now, there are three key points that are important. The first one, that the auto ER&D is overall seeing an improvement in demand, and could be the first time where we're actually seeing a brokerage note call out the demand improvement, while management had highlighted in the last couple of quarters of being in improvement, wasn't yet visible in the financials. The second one, that the OEMs are starting to kick off new research and development in this particular space, and that benefits the IT players. And the investments are actually being driven not by the EV space, but by hybrids, autonomous as well as connected vehicles, and does benefit all of these players. Finally, the EV rally, which was expected to be a key story post the pandemic, hasn't yet picked up, and hence there was a lull in demand over the last couple of years. Hybrids coming back is a key positive because products and platforms are already ready for these companies. Finally, in terms of stock performance as well as valuation, it's been a tough year for all of these players in the last 1 year. The most impact has been seen in Tata Technologies, and that's visible and this should be negative returns. So it's minus 23%. All three stocks are down, minus 19 for KPIT and minus 11 for Tata Elxsi. In terms of valuations, it's not cheap by any means, and hence they've seen a time-wise correction. But any signs of improvement in demand will lead to a better year of 2026 for these companies, and JP Morgan holds that view, which is why all these stocks are buzzing in trade today.
Okay. All right. Thanks so much, Puneet, for that. And bear in mind that those stocks have seen negative returns over that time period. They're buzzing in trade today, though. Gains of between 5 and 10% for the three of those stocks, which is why they make it to the stock of the day. But Mr. Choklingam, any positive view on any one of these? Far be it from them being, in the camp of stocks that have extremely high valuations but have missed the mark on fundamentals. These are actually beaten down stocks. So would you be positive on any of them?
Certainly not. I completely agree with you. Those who invested 3 years back still losing a lot of money. Both Tata Elxsi, Tata Technology, part of a great management, all of us know. But look at even Q2 numbers. You look at both the top line year-on-year growth and net profit year-on-year. Not at all impressive. I mean, it's stagnating or negative or very small single-digit growth. So I won't give this kind of valuation. KPIT is better, but valuation-wise, it is stretched. So within this IT space, I prefer Infosys in the Nifty Sensex basket. And in a small cap, I prefer Cyient. It is one of the cheapest IT stocks. And then, as I discussed earlier, I also prefer Oracle Financial Services company.
So that's with regards to where IT goes. It's interesting, DFT Nilesh, with the kind of moves that are coming in today's session with regards to IT, specifically, it's the broader names which are seeing a higher buzz, but the volumes are also pretty strong in the large cap names. Any momentum play that you would want to look at?
Right, so a couple of stocks that are on our radar as well, but not from the large cap space. It's from mid cap and small cap IT names like Coforge and Persistent System. Specifically Coforge, where we have seen a very strong rebound today. It has reclaimed its long-term 200-day moving average. So we may see a follow-up on the upside towards 1750 to 1800 with a stop loss 1650. Coforge is a buy. And apart from that, companies like Persistent, Birlasoft, both the stocks have already seen a surge of over 4%. So better to wait for some bit of a decline in both the stocks, but the major structure looks strong.
Birlasoft, the stock is also at the day's highest levels, 5.5% up move coming in there as well. Stay with us. We'll quickly slip into a short break. Up next, we'll do an entire detailed discussion where it's a clash between Titan and Trent. Where should your bets be? We're not really doing a bull versus bear on Titan, but it's between two companies that will be compared. Please stay tuned.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back to India Market Close, and two companies in focus are Titan and Trent. Both of these companies from Tata Group have been witnessing a diverse growth trajectory. What's working for Trent and what's keeping Titan subdued? Mahima is here with the peer comparison. Mahima, two different companies, same group, but stories are different.
Yes, absolutely. Stories are different, and how, right? You have Titan on the one end, with this shining in trade today and has been shining in 2025 as well. But Trent on the other side has been the top laggard on Nifty 50 in 2025. 2025, Titan saw an uptick of 20% in terms of where the stock performance is concerned, and Trent was down 41% in 2025, and in fact 45% since its inclusion in the Nifty 50 as well. And that happened in September 2024. But with regards to where Q3 update goes, Titan saw robust jewelry growth coming in of 41% in terms of where the jewelry growth stand, 42% for CaratLane, overall 38% in terms of the domestic growth as well. But for Trent, it was the lowest growth in 6 quarters, 17% of revenue growth, and that on a rebased numbers was at 15%. So, Q3 was completely, in different ways for both of these counters. In terms of where the other metrics are concerned, with regards to where the overall reason as to why the revenue growth has not been very good, with regards to where Titan goes, revenue growth largely was on account of gold rally, which we've seen. So there's value growth coming in, but buyer growth was flat, and because of which overall, we've seen that, the overall impact in terms of where the volume growth goes is completely flat. But we'll have to wait and watch out for, because studded mix has picked up. So overall, we'll have to see whether that translates to margin improvement or not. The next one, with regards to where Trent goes, aggressive store expansion is the reason as to why, it is hampering the growth of the company. And of course, Trent has grown at that 50%, above that 50% mark. So on a very high base also we're comparing Trent numbers to as compared to where it was last year. Next, with regards to where LGD's strategy goes, Titan has announced its new brand called Beyond. So they will be operating it completely separately in separate stores. But for Trent, it is a shop-in-shop format. In West Side stores is where they are selling LGD. But we'll have to see with Titan entering into lab-grown diamonds, will that eat away the share of Trent completely in terms of where lab-grown strategy stands? In terms of store expansion, Titan right now is just ramping up and renovating its existing stores. On the other side, Trent is going big in terms of where store expansion stands. Aggressive store expansion in tier 2, tier 3 cities, which is also overall impacting their average revenue per square feet. Lastly, in terms of where ROCE goes, Titan at that 19% mark. But Trent, Trent is actually, in fact, better in terms of where ROCE stands. That's an upward of 31%. But overall, ROCE for both of them, if you see the trajectory for Titan, it has been improving, but for Trent, it has been slightly coming down. So this is the overall view of how the two Tata companies stack up, and of course, one definitely shining in trade and one facing the heat.
Thank you very much, Mahima, for this detailed and a very wonderful analysis. Interesting graphics also being pointed out for both Titan and Trent.
Sharad, first, before you go to anybody else, I want to know whether you bought a real diamond or a lab-grown diamond for your fiancée.
For my
putting
wife,
you on the spot.
No, for my wife, we have bought gold, but yes, LGT is something she uses for her everyday wear as well.
Yeah, but he is a firm believer of only gold. I've had this conversation with
Really?
him multiple times, where he does not just deviate. It's only gold, gold and gold.
There is a resale value, and yes, it's appreciating right now.
You better not let your wife hear you say that.
Yeah, but before we go to the guests as well on Trent and Titan, I think we should be highlighting the Indian Gas Exchange IPO news that has just come in. That's what they've said, that they're planning an IPO by December 2026. And what is interesting, and the reason I'm picking this up, is because Indian Energy Exchange, which is IEX, they will be diluting nearly 22% stake in the gas exchange, on the back of which, if you see IEX also, which is at the day's highest levels, 4.5%, this will be value unlocking for an IEX on the back of the Indian Gas Exchange plan for IPO by December 2026. 22% stake in Indian Gas Exchange is what they're looking to dilute as well. I think it's going to be interesting to see what is the total that they hold there, but an interesting one to watch out for. Very quickly, Mr. Chokalingam, I mean, IEX on the back of not only the market coupling case, what I want to add over here is when you talk about value unlocking by December 2026 in terms of the gas exchange IPO that could be coming in, what would you advise investors to do?
I would sell using this opportunity IEX, because both NSE and BSE started joint venture in energy exchange platform. So no longer IEX is commanding a monopoly status. So I believe the growth momentum will take a beating for IEX. It may remain as a growth company, but the kind of growth it had in the past is difficult to replicate. So therefore, using this positive news flow, I would sell the stock.
Fair point. All right. And by the way, this morning, the technical call was to sell on rise for IEX, and there is a rise at this moment. Let's talk about Titan versus Trent, though. You've got the fundamental analysis, you've got the valuation picture and the return metrics. The question is on the charts for a Titan that's trading up about 3.8% and a Trent that is rebounding just a tad bit. Nilesh, what is the call on the charts? Would you play the momentum or would you buy the stock that got beaten down?
Well, Alex, looking at the momentum in the Titan, this particular counter, I would like to go with Titan only because today we have seen a breakaway gap and good price and volume momentum can be seen today as well. And this particular counter has been in a secular uptrend. So looking at the overall structure, looks like it is heading towards 4,400 to 4,500 levels on the upside. So there is still potential for further upside move to continue. So, but better strategy would be to buy and decline, keep a stop loss below 4,100. If at all you get any dip towards 4,200, that can be a good entry point. For existing, positions, I would suggest to remain invested, keeping a trailing stop loss, and there is still some more room left on the upside. Whereas on the Trent, there could be possibility of a dead cat bounce because the counter has gone into extremely oversold territory. Purely to play this pullback, one can keep a stop loss below 4,030, but I don't see any major trend reversal here.
For that, and also let's move on to the real estate segment. This has been, a big pain, the Nifty Realty Index in 2025 itself. But 2026, is there any kind of a hope coming in? And what are the key indicators looking like for the realty space as well. Getting us all the details is Anushi. Anushi.
Right, thanks for that, Sharath. So it's not been such a great year for real estate in 2025 with the index correcting over 10%. And this is on the back of the sales volume and the launches figure that we've seen. So despite, there being rate cuts, there being talks about there would be improvement in terms of where the housing affordability is concerned, the real estate has not performed so well. So let's understand what has happened overall in 2025. So what we are seeing is that despite of these price corrections and price increases that have taken place, markets more or less have remained resilient. That is what Knight Frank had to say. In fact, new launches, if we see, have been concentrated in higher ticket sizes. It's a lower ticket band wherein, we are looking at overall increase in terms of where the supply is concerned, and wherein there has been a decrease in terms of where the demand is, with higher ticket segments now contributing to more. In fact, if you look at the supply side of the story as well, new supply has now outpaced absorption. Now, this is a key monitorable that we should be having, considering that if this is a continuing phenomenon that we'll see, what will this lead to the pricing trends is something that we should be focusing on. Coming to the year gone by, if we just look at the launches and the sales, both have seen a downtick of 3% and 1% subsequently. And this is on the back of a couple of price rises that we've seen in a couple of regions. Along with that, even if you see the ticket size growth, or rather the sales growth, you'll see that most of this is concentrated in higher ticket sizes, 164% and 55% of growth respectively. And in terms of regions, if you look at the breakup over there, in terms of what's the case scenario in terms of growth, you'll see that NCR has seen about a 9% or rather a 19% of a correction in this 1 year itself. So sales volume has been impacted on the back of this. Bengaluru is another market wherein we've seen a similar phenomenon playing in. 12% is the kind of uptick that we're looking at. So is this sustainable is the major question going forward. So that's in terms of the residential prices that we are seeing. Inventory levels also, if we see from 2020 itself, has seen a couple of changes. It's seen an uptick as well, but it's Knight Frank pointed out that quarters to sale, this indicator has remained healthier. So that's on the positive we are seeing. Coming to the other part of the market in real estate is the office market. While residential, we are talking about price increases, there being unsold inventory levels being some of the concerns that can emerge in terms of how the cycle pans out. Office market has remained on the healthier side with about 20% of an uptick in terms of where the transactions are concerned and 9% of completions. And a majority of this is also seen by rise in GCCs, which has seen increasing contribution. So this is the overall perspective that we have for the Indian real estate market for 2025 and the outlook ahead that we should be watching out for.
Thanks a lot, Anushi, for that. And earlier today, we spoke with Ghulam Zia, Senior Executive Director at Knight Frank, on the outlook for the office space market. Let's listen in.
Office sector is going completely berserk. 20% growth year on year is something spectacular. Last year, we did 75 odd million of gross transaction in the top 8 cities. This year, that number is going to 86, 87 million. 20% growth on such a huge base. So while at that level, we would want the base effect to come in and growth level to really shrink. But in stark contrast, at that higher base level itself, 20% of growth is something which nobody could imagine. So this year was spectacular, especially cities like Bengaluru. Bengaluru saw almost 60% growth over YOY number. Last year, 16.5, 17 odd million. This year, 27 odd million square feet of gross absorption.
All right, so that's a view on the real estate space and specifically commercial. And you got the perspective on the stocks as well. But we've got Shivangi Sarda, who's an analyst, equity derivatives and technical at Motilal Oswal, joining us to wind things down for India market close and indeed the market as well. Shivangi, quick view on where we're heading, because we've come off the low point of the day for the benchmark Nifty 50. And we might just head towards close to that 26,200 mark if the bulls are feeling a little bit of spirit at the end of the day. And what individual stocks do you like? I think you might just be on mute, Shivangi.
Very good afternoon. Thank you for having me. We've seen that profit taking has taken over the indices over the last couple of sessions, but then there has been a very smart recovery from the lower levels, which has kept the market afloat. Now, of course, we've seen that participation can be seen across the sectors, which is lifting the sentiments of the overall market. And we're recommending buy on decline to continue here with a support of 26,000 levels for Nifty for an upside move towards 26,250 immediately, and then 26,350 marks. Talking about Bank Nifty, of course, resilience can be seen here. And we've seen that the dent was slightly lower here. But of course, global cues have kind of, made the indices to take a shift back. But then now we've seen that, the put call ratio has also improved. So call writers are somewhere unwinding their positions, and Bank Nifty looks quite positive for the next up move towards 60,500 marks, crossing its near all-time high levels, and with the support of 59,750 marks, which it had respected even today's session. So this is the take on the indices, but stock specific, we have been seeing that there has been a lot of good buying interest in the auto space stocks. So first up on my radar would be Bajaj Auto, which has consistently performed, from the last 6 months. It has been making higher top, higher bottom, trending upwards with any minor declines being bought into. Of course, we've seen that, from the last few weeks, there has been, a price volume surge here, which is adding to the momentum for this one. And of course, auto space stocks are, doing quite well. They tend to perform quite well in this quarter, seasonality wise as well. So this one's looking quite positive, and we're recommending a buy here with the next target of 10,150 levels with a support of 9,590.
All right. There's one stock that we spoke about from the large cap space, and that's Cipla. That is probably the worst performer on the benchmark Nifty 50 right now, 4% lower. And that's because a key partner that they have, which is Pharmathen, has gotten a number of negative observations from the US FDA. But because it's reacting so much, it's the perfect contender for bull versus bear. And we've got Varsha joining in to tell you about the positives and the negatives as they stand right now. And you can take the call based on this information. Varsha?
Well, thank you so much for that. Let me just start with a negative point since the stock is under pressure. If you see the manufacturing issues at partners facility is actually a negative sign. Now, why do I say that? Because the drug that is lanitrotide is the top contributor for Cipla, and hence the observation in facility could disrupt the manufacturing process of this drug, and hence would affect Cipla. But onto the bull case, management is confident of achieving $1 billion US sale by FY27. Moving on, there are multiple upcoming US launches over the next 4 quarters, which will actually help Cipla when it comes to the growth for FY26 and FY27. But the margins are likely to soften in H2 FY26. This is on the back of lower Revlimid, that is cancer drug, and of course the increased R&D. But they've also entered into obesity market, that is anti-diabetic portfolio with Yorpic via Eli Lilly tie-up. But this the revenue potential from this we'll be seeing in the medium term and not in the near term. That's one of the the bearish point that the Cipla has. But the high growth segment, that is biosimilar, Cipla has actually entered into biosimilar, which is the next leg of growth for the company. But the Revlimid contribution will be virtually nil from Q3 FY26, which will actually impact the earnings in the near term. Then also, if I were to talk about but Cipla is actually confident when it comes to new launches to offset the Revlimid decline, which is again a positive thing. But FY26 margin cut guidance, so they've cut the margin guidance for FY26 on the back of weak mix and seasonality impact. So overall, the longer term growth, if I were to talk about for Cipla, is actually a stronger one. But yes, today the stock is under pressure because of the manufacturing issues at partners facility.
Thanks a lot for that, Varsha. Mr. Chokulingam, I'd like to get you on this Cipla. Of course, there is a negative news flow coming in. The stock is down 4% but fundamentally, how you're looking at the entire pharma space, because the entire Nifty Pharma Index, you see, that's on the other hand, it's going really strong. It's the top sectoral gainer also. So you need your views on Cipla and any other important pharma company which would be in focus?
I think Cipla one can consider at current price. I think it is fully priced in. The reason for recommending Cipla at current price is that its exposure to North America is not dominant. It is only about 27% of the total sales. And dominant source of revenue is from India. So therefore, the concern is it will have an impact, but I think it is not going to have a dominant effect. Whatever impact it will have, it is priced in today's correction. So I think it has become quite attractive at current price.
What would be your view on the other pharma stocks as well? I just like to point out the Nifty Pharma Index, where you see all the constituents, all of them are in green. Ipca Labs, Wockhardt Pharma, Torrent Pharma, all of them going up more than 5% in the trade. Any important risk-reward ratio where it's favorable right now? Yeah, Shivangi? Pharma picks?
So, talking about the entire pharma space, of course, you've seen that, dent has been seen over here. And talking about the risk reward, we've seen that most of these counters were consolidating. The good ones were, definitely consolidating near its exponential moving averages. But the diagnostic space stocks have comparatively done better than the purely pharma stocks. And now if you look at a DV's lab or Loris Labs for that matter, these stocks have caught the investors' attention and confidence. So these should be kept on radar. Of course, we're seeing that even after the dent today, Loris Labs is trading in gains with over 1%. So overall, this stock has showed resilience despite the volatility, and it has actually been outperforming since the last 3 years. So from the pharma pack, if we extend it to the diagnostic space as well, so Loris Labs would definitely be my pick here, and this should be a portfolio stock.
So that's with regards to where Loris Lab goes. In fact, the entire pharma pack has been in the limelight as well. But moving on, Kaynes Technologies is back in the turmoil zone after crashing over 50% twice in the past year, and it has hit a fresh 52-week low as well. Let's understand what's happening with them with all the fundraisers that they've done in the past, and what's the way forward. My colleague Puneet joins us with all the details. Puneet, what is the story looking like with the Kaynes Technologies, though that's mild recovery in trade today?
Well, it's been a tough 2025 for the company, and 2 times is what is corrected 50% in just a period of 2 months. So when you look at January to March of 2025, the stock crashed at that time, and it has hit a 52-week low yesterday in this trading session of 3,683 as well. It's a level that we almost didn't imagine the company could hit, with a high of almost 7,800 at the start of the year. When you look at the 2 time periods specifically, Jan to March 2025 is where it hit 7,825 as the peak price. The lowest was 3,900. It just took 66 sessions for the company to have the 50% drop. When you look at the second period, which is much more recent, between October and December, 3,711 is what the low was, and then it hit another low of 3,683. So another just 62 sessions where the story completely changed for the company, and this time it seems much more severe based on the cash flow concerns amongst others. Now, when you look at the time period of fundraisers and of the last 3 years, it listed in November 2022, raised 857 crores, out of which the fresh issue component was 530 crores. And you can see that over the last 3 fundraisers, the company has raised funds at almost 10x the IPO price in as early as June of 2025. Post that, the story has, for the sector as a whole, has been changed in terms of valuation, as well as concerns for revenue recognition and goodwill as well. And largely that seems to be the play. Now, the reason we are discussing the fundraise is because the company's growth trajectory is quite strong. 61% revenue growth is what's estimated in FY26 alone. But over the next couple of years also, they have some steep targets. Will they need another fundraise? That's the key question we are asking. Over the next 3 years also, the operating cash flow seems to, of course, go 10x from almost 40 to 50 crores in FY26. This is, of course, the average of brokerage estimates, expected to grow to 522 crores. Despite that, with the new ventures in PCB as well as the OSAT and the semiconductor facilities, this will lead to a pressure on the free cash flow, down 860 crores in FY26 itself, but doesn't get in the positive territory at all until FY28, and we're still waiting 29 numbers from brokerages, but that is the picture for the counter as we speak. What do you have to watch for in H2 of FY26? The Q3 results will be critical for the company in terms of reporting, cash flow management, as well as working capital. Revenue of 4,500 crores is what's estimated compared to 2,800 crores they did in last year, 25. Second key point is guidance of lowering working capital to 7 to 80 days, and this is the most crucial for Kaynes Technologies, and a $1 billion revenue target that remains in FY28. What is our analysis though? There are investor concerns at the moment on the negative free cash flow which will be generated in the next 3 years, consolidated as well. The company had stated to NDTV Profit in the previous interviews that they will not need another equity fundraise, but with the growth capital as well as the worsening position of receivables, that seems to be one of the key aspects. And finally, if the company doesn't manage its working capital, it will need another fundraise. That will be something that investors will be a little wary of based on the company's current share price performance. So that's the profit intelligence segment on Kaynes Technologies. A lot more questions than answers at this point of time.
Absolutely, you said it, and what a comprehensive analysis that was. Thanks so much, Puneet, for that. I want to go across now, and we're winding down the day's trade. Shivangi, I want to go across to you, just in case you have any ideas for quick trades that someone might want to initiate at the end of trade today.
So for today, of course, we're looking at the financial and the NBFC space stocks. Manappuram Finance is one such space which has seen excellent surge in volume and price in the last couple of hours. So, positions it quite well for a good levels here, for a good momentum. It has surpassed its previous hurdle zones as well, trading at its, life high territory as of now. We are seeing that buying is emerging even at these levels. It did make a lot of attempts previously in the last 10 trading sessions. Twice it did attempt to cross these levels, but today the kind of momentum that we're seeing is positioned to take the stock higher to 333 levels with a support of 315.
Okay, so that's with regards to the BTST calls that we're talking about as we speak. Another stock that I want to talk about is even a Camlin Fine Science, and this is on the back of an initiation report that stock is seeing some smart moves today. I mean, Incred is very bullish, 480 is what their target is on the counter, 6% upside coming in on that one. Mr. Chokalingam, any view when it comes to Camlin Fine Science?
I find valuation quite stretched, so I would avoid it.
Sorry to interrupt, but they're talking about vanillin, which is essentially what you put in stuff to get the flavor of vanilla.
Correct.
Which, and you obviously know a lot about that because you know about the beverage space. But then it's an interesting play on that, right? Because their customers would be global, aren't they?
Customers will be global, and sourcing is also very much global when it comes to vanilla, right? Vanillin, and vanillin is one of the most expensive. I mean, we might not even understand the kind of rates that go around when you're talking about, the value of vanillin overall. But this is a very interesting play. In fact, Shivangi, what are charts indicating for this one?
So, of course, talking about this stock, we've seen that of lately there has been a lot of recovery that has been attempting from the lower levels. But then again, we've seen that on the monthly basis, this stock has consistently made lower highs, lower bottom from the last 7 months. So clearly there has been momentum that has been lacking here in Camlin. But again, we've seen that, the support levels have been, respected from the last 15 odd trading sessions. So definitely 143 would be an important support to watch out for this one. And upside still remains capped. We are looking at 155. Which it did kind of cross today, but it failed to hold at these levels. So it would be important for this stock to hold above 155 for the next fresh leg of momentum to begin.
Just correct myself on Camlin Fine as well, because when Alex just mentioned about vanillin, it was vanilla which was in my mind. Vanillin is the synthetic version of vanilla which people have started using, which cost around $32 per kg when you talk about the US market, whereas the cost of vanilla is very high. So that's where the use of vanillin has increased as well. And I think that's the play that you're betting big on, and that's what InCred is betting big on as well. But very quickly, a few of the other names which are buzzing in trade. You have Info Edge on the JobSpeaks data 2025 that did come in. Two things that caught my eye. Insurance, hospitality, good growth coming in on both these aspects, and it was the non-IT segment that saw good growth. The stock has cooled off slightly, but still trading in the positive. Shivangi, any trade with regards to Info Edge?
So, of course, Info Edge has been in kind of momentum, but, we've seen that it has been a highly volatile stock, consolidating within a very consolidative band. And from the last, 6 months, we've seen that this band has not been able to surpass. It's kind of forming a narrow triangle pattern formation on the monthly basis as well. So highly volatile. I would, recommend to, a little wait and watch and wait for this stock to stabilize. I think we have better stocks in this same pack, which one could focus on this time rather than this one.
Focus on Tata Motors PV, and there has been a kind of a downgrade coming in from the broking houses as well. And in the day's trade also it is down, trying to make a recovery as well. Mr. Chokalingam, need your views on Tata Motors PV. Here, largely we see, there is a kind of a momentum missing just because of the JLR impact which is there. Weak numbers came in, cybersecurity incident impact was there. How is the, fundamentals looking like to Tata Motors PV? Is there any value emerging right now?
No, see, ever since both listed after demerger, I have been favoring Tata Motor CV to Tata Motor Passenger. Now, numbers also not favorable for Tata Motor PV. So, I maintain the same stand. Apart from the core business, even if you look at their investee companies, Tata Motor CV has invested in Tata Capital, which is a domestic play. Tata Motor Passenger Vehicle has invested in a technology company, which is a global play, primarily on the foreign markets. So, therefore, between these two, I continue to prefer Tata Motor CV to Tata Motor Passenger Vehicle.
Is going for a Tata Motors CV versus a PV, seeing the kind of CV upcycle that everyone is betting big on as well. And it's not only Tata Motors CV, right? Even other companies in the CV space are demanding the same kind of interest.
So, and it's not just, so when you say CV, of course, you generally talk about MHCV, you talk about LCV, you talk about ICV, but you extend that to tractors as well.
No, absolutely.
Because there is a big play there, and which is why Mahindra & Mahindra is something you focus on, right? Because
so from Mahindra to your Escorts, Ashok Leyland,
and your financing companies also make it the richer.
Shriram Finance, right, is coming. Chola is coming to play as well, and both of those counters have been buzzing in trade pretty much over the last couple of
Let's ask Mr. Chokalingam, quick view. We've asked you about specific companies, but we didn't ask you about M&M. Would you have a positive view on M&M? Because it seems that if that demand for auto, for SUV, plays through in the fourth quarter, heads into FY27 as well, and tractors are firing, then it's firing on all cylinders.
You are absolutely right. One best way to see the merit of M&M is look at, its performance in SUV, that is in automobile space. When all the competitors were stagnating or growing very poorly, this company has done phenomenally well. Now with the GST reform, I believe this should do better, continue to do better going forward. And second, unlike other automobile competitors, it has got a tractor segment, which is a dominant one, highly profitable, and which is growing in a strong double digit. And tractor also got a GST, benefit in the recent reform. So I completely agree. It's good to hold, even buy on declines for medium to long term.
Declines, yeah.
Yeah, absolutely. One of the stocks that we haven't yet spoken about today, and we've been speaking about FMCG, but we haven't spoken about Avenue Supermarts, right? Because the stock is up and about 5% higher today. I wonder if Mr. Chokalingam would look at this, because let's face it, Mr. Chokalingam, it's not a stock that has been a favorite in the recent past, and investors have had to have quite a bit of patience. Would you say that now is a good time to start accumulating if that FMCG upcycle is supposed to take place?
I would hold it because the physical stores are not doing that well. The competition from quick commerce and e-commerce is hitting them. Yes, Avenue DMart also started, but I still believe it's a small percentage of the total revenue. So I would give a old recommendation, probably wait for December results and understand better, and then I would review.
Okay, that's Avenue Supermart. Strong moves in today's session. Shivangi, a quick view when it comes to Lemon Tree Hotels. That stock is seeing some strong momentum and a spike in trade as well. Would you play the momentum on a Lemon Tree Hotels?
Now, of course, these stocks had been dampened because of the global issues. But then overall, we've seen that on a monthly basis, it is attempting a recovery, even though the longer term structure still remains little dampened. We've seen a good amount of short covering today, and it has recouped the losses of the last 3 trading sessions. But then again, we've seen that this stock is still trading below its 50 exponential moving average. So I would wait for it to cross 158 level, which is the next level. So if it crosses 158, then we could see an upside move towards 165. But this would be an important level to watch out.
All right. Thanks a lot, Shivangi and Mr. Chokalingam, for giving your time and giving your views on both fundamental and technical perspectives. But looking at the markets, a very range-bound move in the markets. But of course, in the last hour of trade, there was some recovery in the Nifty and actually closely defending its 10-day EMA levels as well. Roughly 26,140 are the levels. Nifty Bank also, the down tick is much more. Their recovery was a bit less, down almost 150 points. Let's look at the stocks in the Nifty, what has happened, the constituents, and likely the top gainer has been, you could say, Titan. The stock is up 4%, and the larger IT names, that's where the short covering is coming. HCL Tech, and even you could say like the other larger names as well. But as we move towards the closing, the important selling which has happened in the Nifty index, this of course are the stocks which are seeing a big selling pressure. They are including names such as Power, Tata Motors, Max Health, Maruti, and Cipla. That's where the downtick is coming. Stock is down 4% Sectors also, let's see how the movement has happened. And profit booking coming in PSU banking, realty, as well as in auto space. But IT has been doing really well. We need to check the short covering data today. Consumer durables also doing well. India defense, also some momentum is there, but largely we are seeing a range bound movement with the sentiment turning a bit negative. Let's pull out the advanced decline ratio to see where the markets stand. There were gyrations throughout the day's trade, but eventually it's all even Stevens, 1:1, bulls and bears closing day's trade. And let's pull out, apart from this, the mid-cap and the small-cap index. We had given you an analysis also. Mid-cap index also showing strong recovery. Let's pull up the small-cap index. That's where the breadth is increasing for the last 5 sessions. We had told you at 230, and look at that. This has happened today also. That means value buying is coming in the small-cap space. It's not a sell-on-rise market. Also, these are the important developments, but let's see the BSE 500 stocks where the contributions matter a lot. Broking upgrades coming in, Tata Elxsi, KPIT Tech, even the IT stocks doing well in trade, most of them they're a very value buy. Embassy development, some blocks have started coming in. Avenue Supermarts also up almost 5%. Amongst losers, we have having some chemical names. CSB Bank, there's a profit booking in most of the counters. Interestingly, Rain Industries and Euroca, Forbes also make it to the list. So these are the important stocks which were in focus. That's all, folks, for today at India Market Close. Up next is Market Express by Himangshi.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. The nerve center of the maximum city, the BMC. A contest that will shape Mumbai's next decade. Its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hello, good afternoon and welcome to Market Express. I'm Himakshi Bahugna. Markets have wrapped up trade for the day and we are now bringing you a clear snapshot of what really moved the Dalal Street, the key stocks in action and the global cues that could really shape tomorrow's session. Let's get you straight to the top story. So let's see how the markets have fared today first up. So it was a choppy session on Dalal Street, if I may say, as Nifty has tested the 26,100 levels. If you talk about the benchmarks, they have, however, managed to erase most of the day's losses in the last hour recovery. And broader markets have outperformed the benchmarks today as both the mid-cap and small-cap index ended the day with modest gains. Talking about the sectors, so many of the sectors have shut shop in the red with auto and oil and gas leading the losses. Meanwhile, IT and pharma have remained resilient. Now let's kickstart the show by talking about the Nifty's top losers. Cipla's Greece-based partner has come under US FDA scrutiny. So receiving a Form 483 with 9 observations, so the regulator has flagged serious issues, including contamination risk, poor manufacturing practices, and also unusually high particulate, reject limits. So another key concern was inadequate investigation into out of the specification results along with data integrity lapses. Now this development is significant as pharmaceutical manufacturers, that is, the arm, the grease-based arm, is Cipla's biggest drug in the US market, raising questions about potential supply chain impact. Next up, we have Tata Motors passenger vehicle that was under pressure after a tepid set of Q3 numbers, and production has seen mixed trends in December. Output of the Curve and Sierra models have fallen down sharply, 78%, while Safari and Harrier have and in fact Sumo, they have surged 81%. So despite these swings, CLSA remains bullish, maintaining an outperform rating with a target of 450 rupees. The brokerage also flags near-term challenges from a recent ransomware attack and also tariff concerns impacting FY26 free cash flow. However, it expects scale revival to drive the Jaguar Land Rover margin recovery, while the new launches should boost the India business. And JP Morgan is staying positive on the IT sector, maintaining an overweight rating on KPIT Technologies with a target price of 1,400 rupees. So the brokerage is noting that demand in the auto, ER&D segment is improving. And as OEM clients prepare to restart their R&D programs, Europe is leading the recovery, followed by APAC, while the US is also expected to take a couple of more quarters to bounce back. JP Morgan believes that KPIT is well positioned to benefit from this trend. And JP Morgan has upgraded both Tata Technologies and Tata Elxsi to neutral from underweight, signaling improved confidence in the auto ER&D space. And the brokerage has raised its target price for Tata Tech to 710 rupees and Tata Elxsi to 4,800 rupees. So this comes as demand recovery gains traction, and this is also led by Europe and APAC, while the US is also expected to follow in the coming quarter. So this upgrade reflects optimism around the OEMs restarting R&D programs and also stronger outlook for engineering services. In fact, Titan has sparkled in trade after the company reported a robust business update for the third quarter, and this was driven by strong festive demand and also sustained traction across the key categories. So jewelry growth came in better than expected, aided by higher selling prices and also a healthy uptick in the studded pieces, which has seen mid 20s growth. So domestic business has surged 38% with like-to-like growth in the low 30s. And on the earnings call, Titan has outlined ambitions to lead in both the lab-grown and natural diamonds. So brokerages remain mixed. Morgan Stanley maintains overweight, while Citi stays neutral with a target of 4,125 rupees. And Senco Gold is shining bright after reporting a stellar third quarter update. Revenue has surged 51% year on year, while growth for the first 9 months stood at 31%. So same store sales has also jumped 39%, with diamond jewelry up 36%. Gold prices have also seen a sharp 65% rise year on year, boosting the overall performance. So management remains confident of achieving over 25% annual growth and also continues its aggressive expansion strategy, launching 4 new franchise showrooms in Q3 and also staying on track to open 20 new outlets in FY26. And white-collar hiring in December 2025 has rose 13% year on year, and this is driven largely by non-IT sectors. So insurance led the surge with a 34% jump, and this is supported by a 57% increase in the fresh hiring. So hospitality has posted 29% growth, with Mumbai and NCR as key contributors. Banking, however, has seen a 7% decline, while the startups continue to hire actively. Hiring of seasoned professionals grew 15%, and this was led by oil and gas and also real estate. So non-metro cities like Kochi and Jaipur have emerged as strong, fresher hiring destinations, and this is signaling broad-based recovery in the employment trends. Let's look at some brokerage notes. Citi has reiterated its buy rating on Apollo Hospitals and also raised the target price to 9,600 rupees, calling it a high conviction pick. So the brokerage believes the near-term challenges, including losses from new hospitals and flat margins, are already priced in. So Citi sees attractive risk reward and also expects a strong ramp up in facilities to drive the margin expansion by FY28. It also highlights, HealthCo's transition from being a drag to becoming a value creator, reinforcing confidence in Apollo's long-term growth story. And let's keep it going with the brokerage notes. InCred has maintained its ad rating on Camlin Fine Sciences and has raised the target price to 480 rupees from 425 rupees. So the brokerage also expects the company to benefit from the tight, vanillin markets in the US and also Europe, supported by its high-value blend portfolio. So prices for vanillin are projected to top $32 per kg by the second half of FY27, and this is reinforcing a positive outlook for Camlin Fine. Let's look at more brokerage notes. Morgan Stanley has downgraded Indian hotels to equal weight from overweight, trimming its price target to 780 rupees from 811 rupees. The brokerage says that while Indian hotels remains a well-run business, its current valuation looks fair. It also expects limited upside surprises in the industry's RevPAR cycle, and also notes that the FY27 EV versus EBITDA already reflects, the risk-reward balance. And Lodha Group has reported a strong business update for the December quarter. Pre-sales surged 25% year-on-year to 5,620 crores rupees, signaling improved sales momentum. However, the collections have dipped 17% to 3,560 crores. In a major development, the company has announced large project additions worth 33,800 crores in gross development value, further strengthening its growth pipeline. Now, Lodha continues to focus on expanding its portfolio while maintaining robust sales performance. And INOX Clean Energy has raised 3,100 crores through an equity funding round, diluting close to 6% stake to a mix of foreign and domestic investors. Now, the fundraise values the company at a pre-money valuation of about 50,000 crore rupees. So, the company has said that the proceeds will be used to scale the capacity across renewable power generation and also the solar manufacturing. So INOX Clean is targeting 10 gigawatts of installed power capacity by FY28, and the company is also preparing to file draft papers for its IPO for this quarter. Now on to the upcoming budget. Official sources indicate that India's finance ministry is finalizing budget 2026 proposals centered on deregulating and decriminalizing the business rules. Now, this is being done to simplify the operations and also boost the economic efficiency. Now, the key plans include streamlining registration and approval processes, scaling back routine inspections, and also adopting risk-based tech-enabled oversight. Now, the government is aiming to restrict the criminal penalties to serious offences, while procedural lapses will be decriminalized. Now, these reforms are part of a broader strategy to enhance the productivity, ease of doing business, and also India's growth trajectory. Now, the budget will be presented on February 1st with consultations underway with state finance ministers. And general insurance companies has reported healthy premium growth in December, and this was led by both private and public sector players. Now, Go Digit and ICICI Lombard have posted double-digit increases in the gross written premiums, while state-owned New India Assurance has also recorded strong growth. Now, so overall, if we talk about private sector general insurers have seen premiums rise by 15% year-on-year. Now, the data points to steady demand across the motor, health, and other non-life segments towards the end of the year. And Elon Musk's artificial intelligence startup XAI has closed a massive $20 billion funding round with heavyweights like Nvidia, Fidelity, and Qatar's sovereign wealth fund coming on board. So this funding, which has been in the works for months, will fuel XAI's infrastructure built out and also accelerate the rollout of AI products at scale. Now, what's interesting is that the deal structure, a large part of the money will be used to buy Nvidia chips, which XAI plans to rent out over 5 years, offering investors a new way to limit the risk. And it could also well become a template for future big-ticket AI financing. And staying with global expansion stories and Indian aviation first, this afternoon. Now, Indigo has officially made aviation history, becoming the first Indian airline to induct the Airbus A321 XLR. Now, this marks a key milestone in Indigo's international expansion plans. The A321 XLR will initially fly long-haul routes from Delhi and Mumbai to Athens, helping the airline tap medium-haul global markets more efficiently. Now, Indigo is planning to induct one more of these aircraft by the end of this financial year, underlining its ambition to significantly scale up its overseas footprint. Now, from expansion to a caution, a major global recall now grabbing attention here. Nestle has announced a precautionary recall of select infant formula products across multiple countries after detecting a bacterial toxin in one of its ingredients. Now, the affected batches contain arachidonic acid, oil contaminated with cerulide, a toxin that can really cause severe vomiting and diarrhea, while Nestle says no illness have been reported so far. Parents are being advised to stop using the recall products immediately, and public recalls have been issued in several countries, including France, Germany, and Hong Kong, with the company working closely with regulators and suppliers to identify the root cause. And back home now, and a big push for domestic manufacturing. Tata Power Renewable Energy set to build India's largest ingot and wafer manufacturing facility in Andhra Pradesh with an investment of over 6,600 crore rupees. So the gigawatt greenfield project at Nellore will support solar cells, modules and semiconductor manufacturing, aligning with the centre's push to cut the dependence on imports. Now, the state government has cleared the project and also allocated land along with support for a captive green energy plant. Once operational, the facility is expected to generate around 1,000 jobs and also significantly strengthen India's clean tech supply chain. In fact, China's Lenovo, the world's largest personal computer maker, has announced a partnership with US AI chip leader NVIDIA to help AI cloud providers rapidly deploy the data centers. So this announcement was made in Las Vegas as Lenovo focuses more into artificial intelligence, and the company also unveiled Kira, which is a personal AI system designed to work across Lenovo and Motorola devices, including PCs and smartphones and also wearables, while running in the background. So Lenovo also showcased concept AI glasses and an AI assistant wearable under Project Maxwell, offering users real-time support. Now, turning to capital markets, another tech IPO could be lining up. Popular chat platform Discord has reportedly filed confidentially for an initial public offering, adding momentum to the growing pipeline of tech listings. So the San Francisco-based company, widely used by gamers and developers, has over 200 million monthly users. Discord is said to be working with Goldman Sachs and JP Morgan on the potential listing. Though deliberations are still ongoing, the company says that its focus remains on building sustainable business. Now, let's look at some national news. The Supreme Court has raised sharp safety concerns over the presence of stray dogs in public spaces, saying that you simply cannot read an animal's mind when it's in a mood to bite. Hearing a clutch of petitions on rising dog bite incidents, the court has said that prevention is better than cure and stressed that roads, schools and institutional areas must be kept clear of stray dogs, not just because of the bites, but also because they can cause accidents. Now, the bench has rejected arguments that dogs are mostly confined to compounds, calling such information outdated. Now, the centre, meanwhile, has suggested allowing resident welfare associations to decide whether, dogs should be allowed in gated societies, underlining the need to balance animal welfare with human safety. Now, from safety on the streets to travel disruptions in the skies, Air India has issued a travel advisory for passengers flying tomorrow morning, warning that dense fog and poor visibility over Delhi and parts of North India could disrupt the flight operations. So the airline is saying that the weather conditions may have a cascading impact across its network, leading to delays, diversions or cancellations. Air India has assured passengers that ground staff will be available for assistance and also highlighted its Fog Care initiative, under which the travelers are informed in advance and also offered flexible options. Now, passengers are being advised to, check the flight status before heading to the airport. And that, fog is part of a broader winter chill tightening its grip Winter has firmly set in across North India, with Delhi recording its first cold day of 2026. Snowfall continued in several hill states while temperatures dropped sharply across the region. The IMD has forecast more light rain and snowfall in Jammu and Kashmir, Himachal Pradesh and Uttarakhand. So in the national capital, maximum temperatures hovered between 13 and 16 degrees Celsius, with cold day conditions likely to persist. So the weather office, says a cold day is declared when maximum temperatures fall significantly below normal, and a trend now clearly visible across northern India. Now from the cold weather to a worrying public health warning from central data. A stark report by Jal Jeevan Mission has revealed a serious public health concern in rural Madhya Pradesh. Now, more than 1/3 of drinking water samples in villages are unsafe for human consumption. Now, according to the government's own assessment, only 63% of the samples have passed the quality test, well below the national average. Now, the findings are even more alarming in the government hospitals, where nearly 88% of water samples have failed microbiological safety checks. Schools weren't spared either, with over a quarter of samples found contaminated. Now, the report is raising urgent questions about water safety, healthcare risk and accountability at the ground level. And India has voiced genuine concern over the unfolding crisis in Venezuela following the US military operation that led to the capture and detention of deposed President Nicolas Maduro in New York. Now, External Affairs Minister S. Jaishankar, speaking from Luxembourg, said that New Delhi is closely monitoring developments and has urged all the parties to prioritize the well-being and safety of the Venezuelan people. Now, calling for dialogue and a peaceful resolution, he also underscored India's long-standing, warm ties with Venezuela, saying that what matters most now is that Venezuelans come out of this turbulent period safely. Now, Washington's actions have sparked global debate, but India's focus remains on stability, humanitarian concerns, and peaceful engagement. In fact, Prime Minister Narendra Modi has spoken with Israeli Prime Minister Benjamin Netanyahu, conveying New Year greetings to him and the people of Israel. In a post on X, the Prime Minister has said that two leaders have discussed ways to further strengthen the India-Israel strategic partnership in the year ahead. They also exchanged views on the evolving regional situation and reaffirmed their shared resolve to fight terrorism with greater determination. Now, the conversation underscores the continued strategic convergence between New Delhi and Tel Aviv, particularly on security cooperation and counter-terror efforts. Now, amidst upheaval in Venezuela and the arrest of President Maduro, US President Donald Trump has announced that interim Venezuelan authorities will transfer between 30 and 50 million barrels of sanctioned high-quality oil to the United States at the market price. Now, Trump has said that the proceeds will be controlled by him to ensure benefits flow to both US and Venezuelan people. Now, the oil will arrive in the US via storage ships and be unloaded directly at US docks under Energy Secretary Chris Wright's direction. Now, valued at up to $2.8 billion at current benchmark prices, the deal underscores US efforts to leverage Venezuelan energy assets amid political upheaval. Now, more on this evolving story. The US administration has informed Venezuela's interim leader, Delcy Rodriguez, that it must sever economic and strategic relations, with China, Russia, Iran, and also Cuba. Now, Washington also requires Venezuela to partner exclusively with the US on oil production and also prioritize US buyers. Now, the move follows US efforts to control the Venezuelan oil output and also finance without deploying troops. Senior officials are saying that tankers are currently full, adding leverage to US demands, and meetings with American oil companies on investments are expected within the week. And Trump's assertive foreign policy posture isn't limited to Venezuela. The United States has once again raised eyebrows globally by saying that the use of military force to acquire Greenland is always an option. Now, the White House said that the President Trump views control of Greenland as a national security priority to counter Russian and Chinese presence in the Arctic. European leaders and Canada have strongly rejected the idea, stressing that Greenland belongs to its people, and any US attempt to seize the Danish territory would severely strain the NATO ties. Greenland's own leadership has repeatedly said that the island does not want to be part of the United States. And with that, viewers, we wrap up Market Express. We'll keep tracking all the developments that could set the tone for the next trading session. Thanks for watching. I'm Himakshi Bahugna. Stay tuned.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
The nerve center of the maximum city. The BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today.
Market ends lower for the third straight session after pairing early losses. Sensex recovers over 300 points from the day's low, while Nifty closes above 26,100. Pharma closes as a top sectoral gainer, while broader markets outperform the benchmark. Keynes Technology tells NDTV Profit that tariffs will not have a significant impact on the company, says the semicon major invests in the US to avoid tariff. Budget 2026 will focus on deregulation and decriminalization. Sources say Finance Ministry is examining proposals from multiple ministries and departments to simplify the rules and procedures. Assam President calls for subsidies for the MSMEs to aid the tariff blow during the budget. Stresses on the need for process simplification to reduce imports and increase domestic production. ThyssenKrupp confirms that the company is in confidential talks with Jindal Steel International for the sale of steel business. Spokesperson tells NDTV Profit that both the parties will address all the relevant parameters, including valuation and obligations. President Donald Trump reiterates his good relationship with PM Modi, but underscores that PM Modi is not happy with him over the high tariffs US has imposed on India. Donald Trump also says Venezuela will be turning over 30 to 50 million barrels of oil to America, announces that the Venezuelan oil will be sold at market price and he will control the funds from the oil sales. External Affairs Minister S. Jaishankar says India is concerned about recent developments in Venezuela, urges all the involved parties prioritize the well-being and safety of the Venezuelan people. Prime Minister Modi speaks to his Israeli counterpart Benjamin Netanyahu. Both the leaders discuss ways to strengthen the strategic ties between their countries, reaffirm their shared resolve to fight terrorism with greater determination. Hello and welcome viewers. This is Profit 360 on NDTV Profit and I'm Malika Mishra. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Speaking on the latest, the Ministry of Statistics and Program Implementation, also called MOSPI, has released in fact its first advanced estimates of GDP. The government sees FY26 GDP growth at 7.4%. On a year-on-year basis, government sees FY26 GDP growth at 7.4% versus the estimated figure of 7.5%. I, in fact, have my colleague Shrimi Chaudhary joining us to understand the first cut of these numbers. Shrimi. As Shrimi joins us for helping us understand, remember viewers, this is an extremely important data point as it would give us some kind of idea as to how the budget would be planned. The union budget is going to be announced on February 1st. NDTV Profit also reported that to you. The GDP estimates, remember, comes at a time when India's consumption has picked up significantly, also bolstered by key policy reforms that have given it a good jolt. And remember, most economists were also expecting the GDP to be above 7%, and the latest data as released at this point in time shows that the government sees FY26 GDP, that's GDP for this financial year 2026, at 7.4% versus the estimate of 7.5%. So there's a bit of a drop there, but we'll have to see what our experts have to say. We'll soon have our experts joining us as well into this conversation to help us understand the first layers of these numbers. But the big point here is the fact that we have the GDP numbers that have come in. We also have, as I was saying, Gaura Sen Gupta, Chief Economist at IDFC First Bank, and Radhika Rao, Senior Economist, Executive Director at DBS Bank. Thank you so much, ladies, for joining us in this conversation. Let me start with Gaura. Gaura, are these numbers to the tune of what you expected, and what does this mean for the budget?
So you'll have to tell me the nominal GDP. So real GDP has come at 7.4% for FY26. For us, our expectation is higher. We see definite upside risk. We are at a 7.6% in real growth rate terms. If you look at high frequency indicators, there is a broad-based pickup of growth in Q3 for both urban, rural, thanks to the GST cut. Rural, in fact, had begun to pick up in Q2 itself. We are also seeing quite a pickup in consumption, in production activity. You look at production indicators, freight movement. Also, there's a whole combination of monetary policy stimulus, fiscal support is showing signs, and especially in the Q3, and we expect Q4 also to be on the higher side. As per our estimates, you will also get the transient support of the deflator. The GDP deflator growth will turn negative in Q3 because WPI is negative. So that will further boost real growth rates. So we see upside risk to the 7.4 real GDP growth. For us, it's tracking at 7.6 versus the 7.4. For the union budget, the budget had penciled in an 8% nominal GDP growth. I'm not sure what the advanced estimate nominal GDP growth is, but we see some upside risk there also. Our estimate for nominal GDP growth is tracking at around 8.2 versus the budgeted growth of around 8.
Okay. Notice. So nominal GDP growth was seen at 8% versus 9.8%, and the GDP growth is being seen at 7.4% versus 6.5% on a year-on-year basis. Some other key data points that are kind of emerging at the moment is also the fact that FY26 agriculture sector growth was seen at 3.1% versus 4.6% in FY25. So there's been a bit of a drop on those metrics. I'd like to get in Radhika Rao on this. How do you see this particular drop, Mr. Rao?
Hi, Malika. I think certainly what we were looking for, obviously, the farm sector is very important in terms of where the overall growth grows, and it seems to show around the 3% mark. But if you look at the other breakdown, it's along what was the momentum, I think, in the first 2-3 quarters of the year. Of course, we have official data only for the first 2 quarters of fiscal 26, but the third quarter also, just like Gaura mentioned, is going to see quite a strong upside. In fact, our own estimate for growth is much stronger. It's at about 7.7% for fiscal 26 because it's taking in a strong Q3 and slightly sub 7% Q4, which, overall average is giving us a quite high number. In terms of the drivers, I think investment and consumption would both be quite important. And I think both of them, at least the breakdown initially available, seems to suggest that that's what MOSPI is also factoring in. And insofar as the nominal GDP is concerned, it seems to be showing at 8%. I think the actual number will be a bit higher than that. But there's still a gap between what the budget number set at 10.1 and what the prevailing nominal GDP seems to suggest. But let me also add here that the pace of nominal GDP is one thing, but if you see the nominal size of the economy, truth be told, fiscal 25 was actually bigger than what was budgeted. So fiscal 26 need not be that much bigger. Even with that about 8.2, I think we will be quite safe in terms of the fiscal deficit numbers. So overall, I think the numbers for first advance estimate are more or less where the market's expected. But I think when the second advance estimate comes out late February, it'll be affected by a couple of things. Firstly, of course, it's going to be a rebased data. So we will be talking about completely different set of, breakdown and numbers when we speak again on this. But even apart from that, if you had seen in the past as well, there usually is an upside bias to this first advance estimates, because this captures data from about November, a bit of December numbers, and there is still more, nearly a quarter to go. So routinely seems to usually has an upside bias to the actual or revised numbers.
All right. But you did mention that investment and consumption would be key influencing factors on this number. We have my colleague Shrimi Chaudhary also joining us to help us understand the first cut. Shrimi, what are you gathering from these numbers? What kind of a story do they tell?
Yeah, very clearly, if you see, there are two important headline numbers. One is, of course, the real GDP, which is more or less on the expected line, which is 7.4%, and the nominal GDP, which is 8%. Market expected around 8.3 to 8.4%. Now, nominal GDP is, of course, very important, and that's the number to actually watch out. Government, how they're looking at the revenue, the spending, and overall fiscal deficit. So that's the key number we need to watch out, and that is coming at 8%. Now at 8%, if you compare that with the previous assumption, previous budget assumption for the current financial year, it was 10.1. So is it a kind of risk somewhere on the growth? Clearly no, because with 8% of nominal GDP, it's pretty clear that government is on the track as far as fiscal numbers are concerned. However, there could be some changes you could perhaps see in the revision of the tax numbers, the revenue numbers in the upcoming budget. The another important factor which need to be watched out, that what is government going to have projection for the next financial year in terms of nominal GDP growth, because 8% is giving you that much of cushioning because of the broad base in the FY25, which is around 9.9%. So clearly that sort of cushioning is coming, but definitely the government will take a call on how they are going about their targets, the budgetary targets in terms of the revenue projection, in terms of their expenditure, as well as whether they are able to keep the fiscal deficit target at 4.4%. Is this first estimate which is going to decide? Malika?
Yes. As you mentioned, the fiscal deficit, and in fact, Radhika Rao was also talking about it. Ms. Sengupta, I'll get you in on the fiscal deficit number, because, the GDP figures is a very important factor when it comes to managing the fiscal deficit. How do you think, now that the numbers have come out, will the fiscal deficit for FY26 be impacted, and what direction is it going to take?
I just want to give one caveat. So the 10.1% nominal GDP growth that was budgeted, that was based on FY25 RE of GDP. So what happened was FY25 nominal GDP turned out higher than the RE. So if you put the implied budgeted growth rate of nominal GDP on FY25 actuals, the growth rate, budgeted growth rate is actually 8%, not 10.1%. So if the advance estimate is indicating the nominal GDP growth is at 8%, which is on top of FY25 actuals, then it's in line with the union budget. It doesn't add or reduce. From a fiscal perspective, this has been a very challenging year for the center as well as state governments in terms of tax collection. For the center, we see quite a shortfall in tax collection. Our shortfall in gross terms is tracking at around 2.5 to 2.8 trillion in gross terms from the budgeted target. And this is reflecting the substantial income tax cut, the substantial GST cut. On top of that, slowdown in nominal GDP growth from a 9.8 in FY25 to an 8% growth estimate for FY26. As per us, nominal GDP might be slightly better. So we are building it maybe at an 8.2 versus the advance estimate of an 8% or the budgeted estimate also of an 8%. So there is a challenge that has happened on the revenue collection front, but we still expect the center to meet the 4.4 target. Reason being, non-tax collections have been very robust. You have an RBI dividend, which is higher than budget estimate. The center is also earning more on excise duty collections because they had hiked petrol diesel tariffs in the month of April. They had hiked the duty on petrol and diesel. The other support is PSU dividends, especially oil PSU, coal PSU dividend. That will be higher than what is budgeted. So, and on the expenditure side, especially revenue expenditure side, we see sources of saving. One is the just-in-time cash management on the funds that the center provides to states for expenditure on schemes. There, every year, over the last few years, the center has been saving money because of just-in-time cash management. The other source of savings is that interest cost for the center is tracking lower than the budget estimate. Plus, there are various other areas where certain ministries are tracking lower than the full year budgeted number, and now we are entering Q4, so they cannot spend, the full budgeted amount because there's restrictions that are placed in Q4. So overall, even though the tax collection will be weaker than target, the fiscal deficit is still met at 4.4.
Thanks for that clarity, Gaura. This is Shrimi from Delhi. I wanted to understand that with the nominal GDP coming at 8% for the current financial year, what's your expectation on the next financial year, that is FY27? Because clearly this will going to be the base for government to decide on the nominal GDP for the next financial year. So what's your estimation?
So as Radhika mentioned, we'll be getting the new base GDP. So our estimate is still on the old base, but it shouldn't make too much of a difference. Our estimate for FY27 nominal GDP is tracking at around 8%, is around 10%. So from an 8.8% around FY26, it picks up to 10%. The pickup is led by the deflator growth picking up, because next year you will have a base effect which will lift both CPI as well as WPI inflation. So we do expect the nominal side to pick up to around 10% in FY27, which should be a little helpful in terms of tax collections. In real terms, we expect real GDP growth next year to be around 7%. It actually could be higher, but for now we are sticking to a 7% for FY27.
Okay. Radhika, I want to come to you just for understanding, because as we all know that from February 27th, when you will have the second advance estimate along with your Q3 numbers, the base year will change. The base year will be now 22-23. So all these numbers, we have seen quarter1, quarter2 with 7.8% and 8.2%, and now this first advanced estimates of GDP. All these numbers are set to change anyway. So what's your sort of view on that, where these numbers stand?
Thanks, Shrimi. Certainly, I think for all of us, I think there's going to be a big bunch of changes coming. GDP, inflation numbers are also going to look different. Of course, the base year for inflation will be, will be 24. And then you've got IIP, which perhaps will be released later in the year, April, May, where we're going to see another set of change because of the base year. Now, going with the past revision, I mean, if I were to look at the 2015 revision, of course, it's hard to pen at this point where exactly the number would be. But I would think there would be a slight upside bias rather than a downside bias to the numbers that have been released. In 2015, we also had the GVA series that was introduced. We moved from factor prices to market prices. So quite a bit of methodology changes also that happened back in 2015. And I think there would be more such at this point because you will have more granular data, you will have more sectoral data that will be introduced as well based on what Mosby has been telling us in the past few weeks. So putting all these things together, I would say that fiscal deficit for FY26, to our mind, is safe to the extent that we do think that the 4.4% of GDP target will be met. But fiscal 27, the focus is going to change. Your nominal anchor or target for fiscal 27 is going to be debt levels and deficit levels, right? So the finance minister had mentioned in last year's budget that you're not going to be looking at just the deficit point target anymore. It could be a range. And you will be looking at in cohort with where the debt levels are. So from that point of view, I think with a 10% nominal GDP assumption, I think a 4.3 or 4.2% of GDP sounds doable. But I also add here that from here on, I don't think the space of consolidation is going to be very aggressive. I think from pandemic, we're already at less than half. But I don't think in the next 4-5 years, the idea is to pursue very strong fiscal consolidation. I think there is a very clear agenda, at least to our mind, that the government wants to back all its new and strategic priorities, so which means that we want to get a bigger piece of the supply chain pie. We want to focus more on infrastructure outlays. It's already been mentioned about, deregulation and decriminalization. So I think the focus is more on supply side and demand side pressures, because truth be told, the global environment is extremely challenging at this point, from the trade front, from policy front, from security apparatus front, all of that, right? So I think the agenda will be to strengthen the domestic economy as much as possible. So on defense, on infrastructure, on support to states, as well as the supply chain bit. These are some of the priorities we think will come out of the budget. So coming back to your question, I think the rebase numbers, if anything, based on past experience at least, could be similar or have a slight upside bias, which essentially again plays back to the fact that the fiscal deficit targets, at least that will be set for fiscal, which have been set for 26 and might be set for 27. We don't expect a big overshoot or undershoot based on the kind of trend growth that we see.
So both of you actually, Radhika and Gaura, you're saying that the fiscal deficit target will be on track, and that is 4.4% for the current financial year. But one thing I wanted to ask, since we have seen the impact of income tax cut on the tax collection, we have reached around 73 trillion so far, and we have 1 quarter left. Do you see some sort of downward revision in the tax collection target for the current fiscal, and government would also sort of decide its next year target based on the nominal GDP?
Sure. Who's this question for?
Gaura, you
this
can answer
that. This question
is
for whom? All right. Thanks.
Gaura,
as I mentioned, we've seen, we are seeing quite a significant shortfall in tax collection. For us, gross tax collection is tracking at around 2.5 to around 2.8 trillion lower than the target. And this is spread over income tax as well as the GST collections. Income tax collections there are two reasons for the miss. One is the target of the income tax collection in the budget was very ambitious to begin with. So if you look at the budget growth rate implied of income tax in FY26 based on actuals of FY25, it's a growth rate of almost 22% in a year where you're having a substantial income tax cut. Secondly, because of the nominal GDP growth slowdown, that further adds to the slowdown in income tax. Plus, last year, the income tax got a little bit of support from the equity market performance. That's missing in FY26. So that's another drag. So yes, definitely we expect that the target for tax collection has to be revised down in the RE number for FY26, which will get presented in the union budget. We see a shortfall in both income tax as well as shortfall in GST tax collection for the centre.
Right. Thanks so much, ladies. Gaura Sen Gupta, Chief Economist, IDFC First Bank, as well as Radhika Rao, Senior Economist, Executive Director at DBS Bank, and as well as our Delhi Bureau Chief, Shrimi Chaudhary, for joining us in this conversation and helping us understand the various levers of the first advance estimates of the GDP of FY26. Remember, viewers, it has come in at 7.4%. versus what was expected before. But let's move on and talk about how Indian markets fare today. The markets closed lower today as the Nifty ended in the red for the third straight session. Benchmarks underperformed the broader market indices, and Nifty Auto emerged as a top, in fact, the worst performing sectoral index, snapping its 6-day gaining streak. Most sectors ended lower except IT and pharma. They had a good day. But let's get in my colleague Mahima for all the key highlights from today's market action. Mahima.
Well, overall for a market, it's been a topsy-turvy day in terms of where the benchmarks are concerned. They underperformed the broader markets, but well above the 26,100 is where we found the comfort zone. With regards to the broader indices, overall it was a good session. Both the mid-cap 150 and the small-cap 250 closed in the green. Nifty closed lower for third straight session. Cipla and Maruti were the top losers on the Nifty versus Titan, the top gainer on the Nifty today. Sectoral indices closed on a mixed note. Largely, Nifty IT was the top sectoral gainer, closed around 2% higher on the back of, ahead of its Q3 earnings. The Nifty Auto fell the most, saw the most profit booking, emerged as the top losing sector for the day. Tata Elxsi KPIT Tech gained over 6% as JP Morgan upgraded its rating. You have Tata Elxsi and KPIT as the top gainers for the mid-cap 150. Elecon Engineering gained again 8% ahead of its Q3 earnings, and Elecon Engineering and Saregama were the top gainers in the Nifty small-cap 250 space. The advance decline ratio also indicated, almost even Stevens when it closed, because throughout the day there was topsy-turviness with regards to where the advance decline ratio stands. So this is the overall view as to how markets have fared in trade today.
So topsy-turvy trade today, but viewers, that's all the time we had on this edition of Profit 360. Do stay tuned to the channel as we continue to bring you a lot more news and updates. This is Malika Mishra. Thanks for watching.
Agarwal Packers and Movers Limited. Man with the cap. Not 300.
For decades, Punjab has been celebrated as the food basket of India. But today, the state is undergoing a transformative shift, emerging as a powerhouse of industrial innovation and opportunity. This is the story of Punjab's industrial resurgence. Under the visionary leadership of Chief Minister Bhagwant Singh Mann, Punjab is not just attracting investment, it's cultivating an ecosystem where industries can thrive. The focus is clear: ease of doing business, robust infrastructure, and a skilled workforce.
इंडस्ट्री लग जाऊगी, साढ़े नौजवान मुंडे कुड़ियां नूं काम मिल जाऊगा। इंडस्ट्री तो ही असीं सुझाव लए ने सारे, बहुत सारे इंडस्ट्रीज बैठे ने। इंडस्ट्री तो इसी पुछिया भी की करिए, सरकारां तंग करन वास्ते जां सरकारां कोई मुश्किलां पैदा करने वास्ते नहीं बनदियां। सरकारां हमेशा सहूलतां देण वास्ते और लोकां दी तरक्की, लोकां दा जीवन पद्धर उच्चा चुੱਕਣ वास्ते बनदियां। सरकारां दा काम ही ਇਹ ਹੁੰਦਾ, जिवें लोग कहण उवें सरकारां नूं ਚੱਲਣਾ ਪੈਂਦਾ, और ਚੱਲਣਾ ਚਾਹੀਦਾ भी, क्योंकि सरकारां लोकां ने चुणीਆਂ ने।
The government has streamlined processes, cutting red tape and ensuring faster clearances through its single window system. Key sectors like agro-processing, IT, pharmaceuticals and textiles are receiving unprecedented support. We are seeing a surge in startups and SMEs, many led by dynamic women entrepreneurs, diversifying Punjab's industrial base beyond traditional sectors. This is Punjab's promise, a land of enterprise, innovation and sustainable growth. The government is not just building industries, it's building a prosperous future for all. Come, be a part of Punjab's industrial success story.
भाई कोई कूल बैंक बताओ ना जिसके लिए हर कस्टमर इंपॉर्टेंट हो।
SBI कूलेस्ट है।
किसान से NRI तक, Gen A से Gen Z तक, SBI सबके लिए है।
Very good.
SBI, the banker to every Indian. Truly.
Punjab government foremost in public welfare. Investment of rupees 1.5 lakh crores in 3.5 years. Punjab has seen an investment of 1.5 lakh crore rupees in just 3.5 years of the government led by Bhagwant Singh Mann. This has generated employment for 4.5 lakh people in the state. Tata Steel is setting up a green steel plant in Ludhiana with an investment of 2600 crore rupees. This plant will produce 7.5 lakh tons of low-carbon steel per annum from recycled scrap to meet the growing demand for sustainable steel. Man-made fiber, power, packaging, food processing, automobile, IT, semiconductor, hospital and services are the emerging sectors for investment in Punjab.
राइट टू बिजनेस हर एक कह दिंदा बट ईज ऑफ डूइंग बिजनेस ਉਹ ਤੋਂ ਵੀ ਜ਼ਿਆਦਾ ਵੱਡੀ ਗੱਲ ਹੈ ਕੰਮ ਕਰਨ ਦੀ ਸੌਖਾਈ ਸੋ ਸਾਡਾ ਮਕਸਦ ਇਹ ਹੈ ਕਿ ਅਸੀਂ ਪੰਜਾਬ ਨੂੰ ਹਰ ਖਿੱਤੇ ਦੇ ਵਿੱਚ ਅਸੀਂ ਪੰਜਾਬ ਨੂੰ ਨੰਬਰ 1 ਬਣਾਉਣਾ ਚਾਹੁੰਦੇ ਹਾਂ
In order to give new wings to industrial development in Punjab, the government set up 24 sector-specific advisory committees with prominent industrialists as members in August 2025. The recommendations of these committees related to steel, heavy industry, textile, IT, semiconductor, hospitality, healthcare, packaging, etc. are being implemented on the fast-track Punjab portal with priority.
पहले के जमाने में तो ऐसा होता था कि इंडस्ट्री वालों को पता ही नहीं चलता था कि मेरे को क्या क्या करना चाहिए और वो बेचारे काफ़ी अरसे तक तो उसी में जूझते रहते थे। आज वो स्थिति नहीं है। आज इन्वेस्ट पंजाब के थ्रू एवरीथिंग इज डन वेरी कोहेसिवली इन अ वेल कोऑर्डिनेटेड मैनर ताकि इंडस्ट्री को टाइम टू टाइम सारी अप्रूवल्स मिल जाती है।
Punjab government foremost in public welfare.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. So let's start the show, but I want you to guess the company which is coming at KYC today, where we'll dissect the company and also ask the management about the outlook ahead. Now the company is a Gujarat-based power and distribution player. That's the first hint for you. The second hint, recent announcement in a very big sector where a lot of interest is coming. That's the BESS segment, a battery energy storage space. That's what we'll be looking at. Company also is down 35% from 2024 highs. That's a lot of concern from the investors coming in, and they have written a lot of questions to us, and we will be asking that with the management as well. Recently, they won the GUVNL project as well. Now, let's give you the company's name. You know, what's the concern coming? That's also a very important thing. The transmission industry orders are dying up as well. So we will be asking the reason, will this continue or not? But to give you the perspective, the name of the company, it rhymes. The first name is with a Bollywood's big superstar as well. And no doubts for guessing, it is Rajesh Power. This is the company which you are talking about, Rajesh Power Services. But why are we calling this company? The stock has, given very dismal returns in the last 1 year or so. But what are the concerns coming? The first is a very major announcement has come in. What's the rationale for foray into the BESS space? Already the transmission and distribution space, there are some kind of headwinds already there. The second reason why we are calling this company is there's a rising competition happening in the distribution space. So where does the company stand? What's the moat here? Also, another reason why we are calling this company KYC is the industry is witnessing a slowdown in the transmission projects. And will this continue going ahead or not? That's a key concern where we will be asking the management. Also, another thing is a 3,500 crore order book. Where is the execution timeline? How will the company actually go about it? That's something we will be asking the management as well. Apart from this, going ahead, these are the key reasons why we have taken Rajesh Power here. And any kind of execution of B2G risk, that's one of the largest questions we get from our viewers regarding companies like this, especially what's the private and the overall kind of momentum to look at for the governments. And joining us would be Utsav Panchal, the Director and CEO of Rajesh Power. He will be answering all of our queries as well, which we'll be putting it up. But apart from that, let's look at about the company, what it is all about, and then Utsav will also come in to explain us what's the overall rationale going ahead. But first key reason, of course, is going to be overall you're looking at about the company, like what the company is actually doing. It's a Gujarat-based transmission and distribution player, and largely the company is transferring from an EPC veteran player which is already there. It's a company, it's a turnkey EPC solutions player, and now it's going into the newer areas as well. Let's understand more about this company going ahead. And apart from this EPC solutions player, the company is established in 1971 and specializes in power transmission and the distribution segment as well. And largely we see there is a good momentum coming in the stock. The stock made its debut in December 2024, and since then the stock has tripled. But last 1 year or so, the stock has taken a lot of patience of the investors. They are executing turnkey power sector projects in the transmission and the distribution space, and also looking at the other operations, they offer comprehensive OEM services as well. So that is an important thing. OEM services are for the solar plants, substations and the distribution systems for the business operations. Apart from the business operations, they are offering strategic consulting for the substation and the cable ecosystem design as a whole. If you just imagine a grid structure, that is where Rajesh Power is an important component player, largely regional player, but definitely we are going to look at that. Unexecuted order book and L1 positioning is at roughly 3,500 odd crore rupees, and we'll be looking at the outlook, what Utsav will say. Will it be that 5,000 crore mark? And sometimes order inflows was roughly 2275 crores in H1, and largely the industry gets better numbers in H2 as well. Apart from this, let's look at the order book positions. Transmission and distribution, that is it. Almost you could say 76% comes from the power distribution segment, and the 24% comes from the remaining in the overall transmission segment. So this is the overall order book position coming in, but there are ongoing projects which should be important. 130 kV GIS project in Jodhpur. Apart from this, there are other important projects also which are going ahead by Rajesh Power. If you could just show the important projects, yes, going ahead. One is there in Jaipur. So largely we are seeing there is a kind of a move happening apart from Gujarat as well, and large power kind of orders are also which is there in the company, and a big supply arrangement. The recent announcement has come in for Bari's BSS project as well. So a lot of developments are happening in Rajesh Power. You can just look at these important ongoing projects, and going ahead, of course, the focus will be in the new business sector, the BESS. But why have they entered? That's also a big question, because already two of these segments, they are facing already headwinds, and the third one they have taken again. So that is something which we'll be watching out for. So this is the important developments which have come in about the company. But let me explain you the overall KYC setup. How do we rate a company in our KYC show? If you could just show the important ratings, that will be very much important in our show. First of all is of course the income statement which comes in, the balance sheet, the cash flow, the return ratio. These are the four basic financial ratios which are there. Apart from this, there is shareholding, the street cred, which is nothing but the stock price movement which is happening across various periods, valuation, especially if we compare that with the peers, and last but not the least, the outlook of the company. So these are the important 8 KYC rating parameters where we will judge the company. So the first rating parameter I would like to talk about, that is the income statement. How the income statement has actually panned out over the next 3 years. We have taken the 3-year CAGR numbers. H1 numbers have also been there in our analysis, and rightly we see the revenue and EBITDA numbers. Let's move ahead and see how they have actually panned out. The 3-year CAGR numbers, the revenue is at 94%, EBITDA coming in at 125%, but the PAT numbers, they are also very decent. And you look at it, there has been a significant growth coming in, and of course it's expected to go past that 100 crore mark in FY27 as well. So net income statement prima facie looks very strong, so I've given a thumbs up for this. But let's look at the second parameter, and that is the balance sheet parameter. Balance sheet is also pretty much important. Largely it seems stable. To look at the overall borrowings, that has actually crept up around 82 odd crore rupees. But remember, this is a very capex heavy industry. There is always a B2G and an execution risk also involved to it, and that's what we'll ask Utsav as well. And the cash bank balance, that's decent, that's around 60 odd crore rupees. Remember, this number has gone up, and it's been almost, you could say almost September 2024 onwards, or just before that the listing was there. But net it's decent, so I would be giving a neutral rating. The third one is the cash flow segment, and that's where my concern starts coming. I had earlier mentioned you about the B2G risk, the execution risk, and the cash flow segment, because the company is having a significant government exposure also in terms of revenue. And look at that, the operation cash flows and net cash flows, that's where my concern lies. This is just the numbers of H1 FY26, and that's the way where the concern is coming in. And because of that, I will be giving this cash flow segment a thumbs down. So we spoke about the cash flow segment. Another number comes is the ROC and the ROE numbers. Generally for these companies, you could expect 20 to 25% to be a healthy one, and the company has been doing well. FY25, this number has gone up to 44%. This is the ROE numbers. Let's pull up the ROC numbers. That's also decent. That's also going up. It's an upward trajectory which is there around 35. But will this be a bit of pain going ahead, especially when they're going into the new industries, BSS and stuff like that? So because of that, I will be giving a neutral rating, because the history has given a very strong up move, but the future, will this plateau or not? And that's a concern which analysts and some of our viewers have written to us at our KYC show. They have stated for this company, and that is why I've given a neutral rating when it comes to the return ratios. But I'll show you, apart from the return ratios, what else is very much important. We spoke about 4 rating parameters, and all of these rating parameters are on the numbers. But apart from numbers, there's other stories also which say important aspect, the shareholding segment. Promoters are holding it very decently, 73 odd percent. In September also, this ratio was around 73%. But my concern starts coming is, even if there is a very little institutional participation, be it FIs or DIs, it is starting to reduce. Look at that, it's around 1 odd percent, and now it's going down, and it's almost, you could say, virtually not there. DIs also, they have reduced their holdings from 5% coming down to 3%. That means institutionally also there is a sell-off happening, and because of that there might be a reason why the stock has down 35% from the corrections from 2024 high levels. Public, it has increased, the retail participation has definitely increased, it has come in, but of course because of this, the shareholding pattern I have given a thumbs down. The street cred, let's look at it, what has happened, what returns the investor have got over the last 1 month. Stock is down 9%, and also 6 months stock is down 23%. I have already mentioned a big fall happening in the stock, and that's why the concern is coming in, and viewers write to us about these companies. But since IPO, if you are holding it, because there was already a 90% listing pop, apart from that, still the company is 3x from its IPO price. So on that basis, I will be giving this a neutral rating when it comes to the street cred. Also, the 7th one is the valuations, and the company itself is having different peers, because company is having 2-3 businesses. There are wires and cables, there are project consultants and management companies also, but the nearest one I have taken is Kalpataru Power Projects. That's having a 35 times 12 month, you could say trailing P, but Rajesh Power, after a significant correction, is trading at 12x. That doesn't mean it's very cheap compared to its peers, because largely the corrections have happened because of the headwinds which are there and institutional selling also seen in the counters. So valuations front, because of that, I've given this a neutral rating. Also, let's talk about the last segment, and that is the outlook segment. It's very much important, and we have taken what the management commentary was there in the recent Q2 update as well. First of all, they have stated that 40% CAGR growth across all key parameters. That's what they are expecting. And the second one is the BESS entry. Now, this is from the Gujarat Urja Vikas Nigam Limited, and that is something which we will ask Ujjwal. Apart from this, the order pipeline that's expected to touch 3,500 crore rupees in the coming months. Currently, it's at 3,500 crore rupees. So that's an important statement. And a slowdown. That's the biggest concern. Slowdown seen in the transmission projects. What happens next? Anything you expect in the budget? That's what we'll be looking at. But as of now, outlook, I will be giving this a neutral rating. So let's revise the KYC ratings for the company. The income statement, it's around coming positive. Balance sheet, it's neutral right now. My concern starts coming in cash flow, and that is where this type of business model has a very big risk. Return ratio, they have been decent enough, at least for the industry perspective. Apart from this, the shareholding, that's where my concern comes. Institutional participation is not there. Street cred, largely neutral. Only if you're an IPO investor or holding it very early, you have made good money. But over the last 1 year itself, nothing has happened as such. Valuations, decent after correction. And outlook, that is something which we are watching out. So final rating would be for Rajesh Power around 3.5 out of 8. Generally, these are the neutral ratings when we give the KYC ratings to the show as well. But joining us is of course Utsav Panchal. He's the director and CEO, and he has been associated with the company for the last 7 years. He's an MBA from IIM Kozhikode, and interestingly, he has a specialty in the Six Sigma belt as well. Very, very warm good afternoon to you, Utsav. The question is, first of all, is the BESS project you have entered in here. Already 2 businesses are there which, your hands are full. This third one, how does it make sense, and why is, Rajesh Power actually a good fit in this BESS setup? Yeah, Utsav, please unmute your mic.
Yeah. So basically, thank you for inviting me over here. I'll just answer a question, quickly go through what we exactly do. So we are a leading player in the underground cable laying space, as well as the transmission line and distribution infrastructure space, where we are also carrying out major substation projects up to the 400 kV level, where there is a specialized substation called GIS, gas insulated substation. We are also carrying out that. So coming to your question, I'll just briefly give you a snapshot of the energy storage industry. Yes, we have recently received the LOI from GUVNL for a very small 65 megawatt into 2 hours, which is 130 megawatt hour project. So as of 24-25, the installed capacity in India was 507 megawatt hour, and the installed capacity that became in 25-26 is 5 gigawatt hour. So in 25-26, 65 tenders, which were totaling 102 gigawatt hours, were issued. So 2026 is a crucial year for the industry, proves itself operationally. So energy storage and Rajesh Power, if I say, while tariffs have, yes, collapsed in the standalone BESS segment, taking into account the strategic role and energy storage is poised to play in power generation, transmission and distribution, it is crucial for Rajesh Power to develop its credential as an expert in the BESS segment. BESS is a low-hanging fruit for Rajesh Power in the sense that the core infrastructure is battery containers, which are largely plug and play in nature. They are all pre-assembled solutions with battery packs, battery management systems and liquid cooling systems built by the OEMs. So what comes next is the AC side. AC side, we as Rajesh Power are building substation, transmission line and cables, which accounts to almost 30% of the value of the BESS project. So this makes us one of the best all-in-one turnkey solution provider in the standalone BESS segment. So I think, I hope that answers your question.
All right, and Utsav, some concerns are there, and investors of the company also wrote to me. In Q2 itself, the company was facing competition in the distribution space. Is that competition there also in the third quarter or even the fourth quarter we can expect in the distribution space?
So if I tell you, we are particularly working in the underground transmission, underground distribution space. That is the underground cable laying space, which is a very specialized, nature of work we are carrying out. Also, additionally, we are carrying out medium voltage covered conductor projects, which is roughly around, we are executing 50,000 kilometer of MVCC. It is just a traditional overhead conductor replacement to the new underground, the new type of conductor which carries more power and reliable power. So we are into specialized kind of work. So that is what makes us a little bit unique from our other peers, where we are having the technical experience, the expertise that helps us.
But but the competition is still there, because in Q2 you had mentioned about it. So till now the competitive pressure is coming in the distribution space for you.
So there is competition, but what we are working in is a unique combination of projects where the competition is very limited.
All right. And interestingly, the transmission project, now this is an industry-wide problem, it's not company specific to you, but Utsav, the industry is seeing a good slowdown in this transmission projects coming in. Do you think after this budget, these numbers can move up? So there's a two-part question to it. The slowdown in transmission projects, is it still continuing or some green shoots are coming, and what would be your budget expectations?
So what I would like to give you some inputs over this. Recently, the Ministry of Power did announce a few slowdowns in the power, the renewable capacity additions. The main reason of the renewable slowdowns is the transmission grid is actually not sufficient to build the equivalent renewable. So the speed with which we as a country have grown our renewable generation, we are not able to generate the transmission speed at the same momentum. So in fact, I would look at the other way, that we are having very aggressive outlook in the transmission segment. Just if we say we are working in Gujarat and Rajasthan, we are having a very huge order bid pipeline, as well as the government has set up some very huge projects of substation, transmission lines and underground cable projects. So what we are seeing in Gujarat, the JETCO has given an outlay of 96,000 crore to be executed in the next 10 years, which is roughly converting to 9,600 per year. That is mainly because there is a 30 gigawatt renewable that is there in Khavda, and it needs to be evacuated in this part of the state. So we are seeing a very good traction.
Okay, that's a good traction on that. But Utsav, you had mentioned 40% growth across all the key operating parameters, and that was a blanket statement you had given in Q2. I also mentioned. So give me, what are the key top two metrics to track, and what are that 40% growth, and why you are stating that?
So basically, if we see our our order book as of September, we are having a 3,500 crore order book, which we just proved to have an order inflow of 2,200 crore worth of orders just in H1 up to September 26. So we are seeing a very, very good bid pipeline in place, and that is what has enabled us. So in case if we just see the order book of 3,500 crore, which is to be executed in a period of 18 to 24 months, we quite have a very good revenue visibility in that sense.
All right. Just one query on the financials front. The cash flows are not improving, and that is where the B2G risk, the execution risk comes in, and investors also get restless. The stock is also cracking. I won't ask about the stock price fall, but the concern remains is so operating cash flows, what happens?
So basically, if you see the nature of our company, we are EPC mainly. We are working with decent margin, but as well as utility specific payment terms. So the negative operating cash flow is primarily due to the retention money inherent to the EPC contract. So what is retention money? Retention money is contractually locked receivables with zero risk, where the counterparty is usually large utilities and governments, and it is fully recoverable within time. So it is the retention money that is locked. But if you look at our business, our EBITDA margins are stable, projects are not loss making, and we have no cost overruns or liquidated damages. So we are very much confident in that.
All right. There's an interesting phase. You have entered into the 400 kV GIS segment. Generally, you are into 220, 200, if I'm not mistaken. Now, this new entry segment, what does it actually mean, for this segment and this industry as a whole? How many other big players are there apart from you? Because this is a larger capacity, if I'm not mistaken, and you have entered into it. So give us more details on that.
So with the recent, entry into the 400 kV GIS segment, the GIS is particularly gas insulated substation segment. Very, very few limited players, hardly in a single digit number, are there in the entire country to have capabilities to execute such kind of projects. And we'll be completing this particular 400 kV GIS project by around July, August, by which time we'll have some credentials to bid for very large sized projects, complex projects. So this will give us an edge over, other peers in terms of execution and bidding and winning ratio.
All right, let's just revise the numbers which we have given in our KYC segment. And of course, Utsav, stay tuned. I have one last question for you. But overall, let's revise the audience what numbers I have given from the research team desk as well. And largely, we see the financials, they are good, but the cash flows, that's where my concern is there. And largely, we see the street cred also. There is a kind of a positioning coming down from the FIs and DIs. So net, I have given this company roughly 3.5 out of 8 when it comes to Rajesh Power. But Utsav, one query for you as an industry spokesperson as well. What are your expectations for this budget 2026?
So in the budget 2026, what we are expecting is very, very aggressive outlay in the distribution segment, particularly where we as all utilities are constantly working towards improvement in power reliability. If you see, we have been by doing undergrounding of cables, we have been able to improve the power failure, power downtime by a significant amount in just this part of the country. So that is one point. And second point, we are seeing a focus on smart grids. Now that is where we have associate company called HKRP Innovations comes into play, where we are providing IoT based smart monitoring systems and solutions to the utilities.
All right, can you just give in some more details about this HRKP, because everybody is talking about it, and the future outlay, when the incremental benefits will start coming in from this arm, could you give us a timeline?
So basically, in the HKRP Innovations Limited, we are basically providing end-to-end solutions for IoT-based smart grid monitoring systems, where we as a country have witnessed smart metering projects, at the consumer end. So we at HKRP are everything before the consumer end, where we are providing solution to digitalize the assets and monitor and control the assets of all the grid parameters, including substations, transformers and everything. So we have hardware as well as software solution, and the growth outlook of HKRP is also very promising in the sense the government focus on modernizing the grid. So that is where we come in, and in the immediate next 2-3 years, we are seeing a very good growth visibility in that company as well.
Thanks a lot, Utsav, for giving your views on the company and the industry. And it's very nice to chat with young, dynamic CXOs of companies at KYC. Best of luck for you and the entire Rajesh Power team as well. So that's the management of Rajesh Power. And of course, they have mentioned and they have defended that this is the way the industry works when it comes to their cash flow impact which has come in, but they are still bullish on the budget expectations for the power industries. And net, they're looking at the rating parameters, removing the financials. The outlook definitely seems like the worst might be over for the stock. Of course, the transmission part and the distribution part, that's where the concerns are there. But nevertheless, company wants to jump in the BSS segment, which is the battery energy segment as well. So that's all, folks, for the company, for KYC today. Stay tuned to NDTV Profit.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth.
and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
The nerve center of the maximum city. The BMC, a contest that will shape Mumbai's next decade. Its identity, its